This content is for informational and educational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained here constitutes a solicitation, recommendation, endorsement, or offer to buy or sell any securities or other financial instruments whatsoever by Draper Gorin Blockchain, aka DGB, the presenter, or other associated parties for the content being provided. Please do your own due diligence and seek proper counsel.
Boom.
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 Claiming a mint real quick.
You what?
Claiming a mint real quick. I sent you that drop last night, right?
Oh, yeah, you did send me a link to something.
I did. I don't know. It was cool. Player Zero. I don't know anything about it. I saw their Twitter page. I'm like, hey, this looks like a cool project, some type of metaverse-y type of thing. I'm down with those. I'm like, so okay.
Is it like a
crypto's still not dead, at least for me?
Okay, you know what? It's it's 97 cents.
Dude, I know, 97 cents.
I'll claim them. I'll claim some for 97 cents. That's a fun experiment. If I have anything in this wallet. What?
Are you able to claim more than one?
It allowed me to claim up to 5. Estimated fee 1 cent. Confirm.
Right. I had a good.
I just spent $5 because Rankin told me to. So
that's how that works.
That's how it works.
I didn't realize I'm going to claim 2 more just because of that. Because I didn't realize I could.
A good idea.
I think there's supposed to be characters for this game. I don't know what it is. I just looked at it. I'm like, wow, that looks like a cool game. I'm like, for this price, like, sure. Now, and it looks like a little package. I'm like, if we get to open the package and get some random cool character, that'd be sweet.
Why not? Let's do it. Welcome. There's a few people already watching, and I apologize for the exhilarating content so far. Hey, so if you're new here, or if you're seeing this on the stream, or if you're watching this later, we are from DGB, Draper Gorin Blockchain. We invest in early stage blockchain startups, fintech startups, and all sorts of things that fall under that umbrella because it's what we do. But we're crazy. We say that again.
We actually try the product. We play with the product.
Yes, so we're really different, and that is one of our biggest differences, right? Is that we're not a traditional VC. A traditional seed stage VC starts, in the first round of funding of the company, and we're generally before that, right? Sometimes we're the first check into helping start the company. Sometimes it's our idea, and we help put together the team, and we start the company. But generally, let's say 80+% of the time, it's you come to us. 2 people and an idea, and you're just getting started, and we kind of practically join as co-founders, but we help along the way, and we grow along our companies, and we co-invest and continue to help them scale and grow. And that's what we do. So if you're interested in getting in touch with us from the perspective of you're somebody who wants to invest in this space, please get in touch with us. If you're somebody who has a startup, you especially want to get in touch with us, and please reach out. But we were going to, here's, I'll let everyone in behind the curtain. Last week, I traveled to a conference in London and to some meetings with one of our portfolio companies and some of their investors and customers and products and things like that. And I took the week to do that. And I also kind of got my ass kicked in terms of jet lag and stuff like that. Like I'll tell you about that because it's the first time I've ever been hit this hard. And I think it's a part of getting old or something, but it's also just, timing.
Well, I've heard some strange things in Europe, so I was hoping you didn't really get your ass kicked.
No. As an American, what up, Kevin? I owe you a text and a hangout, which I'll text you after this. But hey, you know what? Maybe message us if you're available, and maybe in 10-15 minutes we'll have you come on and hang with us too. So just message me and I'll text you a StreamYard link. So if you can, no pressure. So there was that, and the event was a Digital Assets Week event, and it's ran by Juliet Media, who's friends of ours, and I've been participating in their events for years and years. Actually, I was at this exact event. They've done ones in the United States since that I've participated in, but the last time I was at their London edition of the event was actually their last event pre-COVID. So that's been, years now since I went to this particular event in London. And it's known for being one of those events where it's not, the crypto, let your freak flag fly goofball event, which I love and appreciate, where we get to hang out with the other misfits and weirdos. It's the more, Kevin saying send link. Let's just get Kevin on whenever he can come on. Why not?
So I'm really curious about the growth in the amount of institutions.
So here's the thing. This is why I went to this event. Well, partly the day before this event, one of our portfolio companies, Onera, a DGH portfolio company, one of the earliest companies that I was involved in actually helping incubate and create. This company, I think the conversations and arguments around should something like this exist for our industry started probably late 2017, and as early as 2018 we were talking about Onera. And so I would say, I don't know the official dates of like when it was incorporated off the top of my head.
Just for context, like 2017 for blockchain and crypto, with how fast technology moves, was really freaking early.
Crazy early. So and it was the if you've been around, it was the times of the ICOs and the things like that, right? So it was the Wild West, and part of those conversations was, should things be tokenized? Should these things exist? And here, bring in Kevin on stage for the fun. But I'm gonna what's up, Kevin? We're gonna I'm gonna give some recap of some stuff, and then we'll how
there.
It goes. Yeah, I like
now
that.
It's perfect.
Like that.
Now it's perfect.
You know what's actually pretty great?
Don't breathe too hard.
Ever since I got my new headphones that have this thing, it's been easier to have those mornings where you get out of bed and you skip the shower because you're running late, and then like you look crazy, and I go, ooh, headphones, and it kind of like blocks it. I got a haircut more recently, so it's not as bad.
The past few days I've been thinking like headphones, which is first of all every day, but like it's these AirPods, which of course is like, oh, that's so much better. It goes, but I'm feeling like, am I missing a lot of the auditory experience by not having it go around my ear? Because our ears are designed to be satellite receivers, and all the curvatures and everything are that. And it's like, yeah, skip the middleman part of the ear and go right to the buds. And it's so invisible, but we're missing a lot. And I feel like I'm, maybe sounds are a lot flatter and I don't even notice them. So I'm not getting the full Alon experience right now. Maybe I should be.
There is, well, one, I didn't set up my proper microphone, so it's probably not as good as a normal time anyway. But I think actually, I like the big headphones for a couple reasons. Partly because it helps for distraction wise for me. Like it's important for me, like to try and focus. But also I've been loving that I bought these ones. These are like Sony Studio headphones. They're like the like standard, I forgot, I think they're $99 or maybe $199, but I think they're like $99, but they have a wire, they connect, I never have to worry about charging, it works really well. And I'm also kind of worried, not actually kind of worried, because I do things that conflict this all the time. So if I was like truly believed in this, I'd be a little more extreme probably. But I also think like it can't be healthy to have these wireless things in your ear that are, pulling some Bluetooth into it. Yeah. We're already surrounded by all this Wi-Fi. We all have like 1,000 Bluetooth devices. Then we have our cell phones that have that kind of thing. And I don't think any single one of those is dangerous, but living a lifetime of being in front of the computer like 14 hours a day with these things radiating into our brains can't be great.
It's the radiation.
But also this also willful ignorance too, because there is power going through this. There is something happening here too that can't be super healthy either. So but
you're not bathing in it. You're letting it shower over you. You're not bathing in it. Like
in my car, right? It's connected to Bluetooth while also getting some Wi-Fi signals while also getting.
Well,
the
one
cell-
day we'll make the big trade-off of getting these like implants in our Elon Musk implants
and
in our
we'll
brains,
finally just
and
die.
yeah, and I'll,
That's
yeah.
the big trade-off.
And
Right?
maybe it's worth it. Maybe it's worth it. It's like, look, it enhances our lives so much. We can do so much more. We're that much more productive, but you lose about 5% of your lifespan. Is that worth it? And remember, that's at the end of your life when it
At
really
the end
sucks
of the life,
anyway.
I think
So
you're gonna go, well, that's true. At the end of your life, you'll be like, well, I just pissed the
good deal.
bed anyway, so what the hell? But
yeah,
I have one of those things somewhere where you can detect how much like frequencies you're being exposed to.
oh yeah,
I always consider getting it, but I don't want to know.
It's better.
Yeah,
to not
well,
know.
it's scary
What is it?
because
The Geiger meter. Yeah.
All the time.
That would be like radiation, but just general. No, you don't want to know. You don't want to know.
And it's coming from you. It's not even any of the stuff. The radiation's just coming from you. Gamma rays, the Hulk.
I radiate positivity. While we talk about this super negative thing that I actually like.
So, hold on.
Okay, wait. Let's go back.
Back to London.
Yeah. So wait.
You
First
didn't-
off, I want to set the stage for this event. You mentioned you want to talk about institutional stuff. So
Yeah.
there's two reasons why I went, right? To support our portfolio company,
Onera.
Onera, but also to meet with some other groups that are working with Onera and to think about how our existing portfolio, including all the portfolio companies, could potentially be integrated with what Onera is building. And I'll tell you about that really quick as like a high level, and then we'll dive into the conference and why I went to the conference and stuff like that. So Onera, the original premise, those arguments in 2017 and 18 were, will security tokens, and then, later the terms went to digital assets or digital securities or digital shares classes or now RWAs are the buzzword, but essentially they're all interchangeable in my opinion. And could those things exist on a public blockchain? Should they exist on a public blockchain like Ethereum? I think they can, but there's going to have to be certain things that are obfuscated, right? Like you think it would be pretty cool if all public records, like deeds for, or maybe not deeds, but what's the term I'm thinking of for a home? A title,
real estate.
Right? Like if all titles were on a public chain, right? All the things that should be public information, but then you have to obfuscate, Kevin's personal information when you look into it and stuff like that. So could they exist? Yeah. Yes. But does everyone agree? No. And will there be one blockchain for ownership? I don't think so. And that's what we're thinking back then. There'll be a blockchain for ownership. That's where Onera came from and stuff like that. But what ended up happening and what's inevitable is just like, there's different blockchains. Some are better for different use cases or others, just like there's different programming languages or different interfaces for technology. Same thing's going to happen with where each institution decides to host or create their products, right? Just like there's different venues in this world, like the New York Stock Exchange or NASDAQ or OTC Markets or Deutsche Börse or any stock exchange around the world. These things exist, right? And that's always going to happen. You know why? Because humans will never agree on a single thing. That's why we all speak different languages. We all live in different countries. It's never going to happen, right? So you have to accept that. And now that we accept that, right? Don't poke the bear. Come on. So these things exist, and we're all going to argue which one's better and which one's not. But it actually doesn't matter to the end consumer, because I don't give a shit when I log into my Robinhood app that
right,
which stock exchange the particular stock I want to buy is. If I was more sophisticated in certain things, maybe I would, but the average person doesn't. And it doesn't make a difference to them.
Yeah, and the only reason why we became tribal at all in the first place is because, like, we've been locked into different tools for these different ecosystems, and there's a friction point of like getting a person within a tool ecosystem, and by extension of that, we get communities, because people have to talk about like, oh, how do you do this right? How do you do that right? And the other factor that goes along with that is that there's a currency associated with that ecosystem. And then when it comes to your money, we tend to get very tribal. We see other people putting their money in other stuff. even if it's like it doesn't infringe on your money at all. It's just like, hey, that's money that could have been in my thing. It's like,
Yeah.
no, that's teaching people about the whole system in general, and that will lead to more money in your thing.
You make a great point, because it like Alon was saying, language, right? First of all, a lot of times the blockchain you're going to go to is because the language that you program in, right? And you're going to talk to people who speak a similar language, just like we do in reality. You don't that a person who speaks Spanish doesn't go hang out with a whole bunch of people speaking Arabic. It just doesn't make sense. Right?
You know what's really interesting, just to throw this out there for a new generation.
Just sound like
I use Roblox as an example all the time for shit. Yeah. I played Roblox with my kids over the weekend, and I must have some setting where I don't have any kind of intervention or intermediary in the chat or whatever. And my son was like, oh, that person just said this. Oh, that person just said this. And I'm looking at the chat and I'm not seeing it. And I'm realizing there's people who are speaking in another language in the chat. He has his settings set up to basically localize it to his language, no matter what language the people speak in.
Oh, wow.
So there's kids who are playing from around the world who are speaking French, speaking Russian, speaking Arabic. My kids just reading it in English, typing in English. They're seeing it in French and Russian and Arabic, and they're just playing together, not even realizing that they're from different countries. And I must have set my setting in some way.
Yeah, it's amazing now.
And I'm like looking at that going, what the hell?
I love it.
But that's also this future that we're going to where, again, that's a prime example. So, because I should go back to why I was saying all these things, right? So cut to Onera today, what they realized is that these silos are going to exist, right? Kevin might be in his financial institution on his blockchain, tokenizing or digitizing his assets, right? And for me to participate in that, I got to go set up an account on Kevin's thing. I got to transfer money from my bank or my current investment portfolio to my bank, then to Kevin's silo and buy the product he wants to sell. And if I want that product enough, I'll do that, right? That's not how it currently works for our traditional stuff. If it's a private deal, you sign a paper and you might transfer money over and you manage it however you do it. But if it's something that's through your Fidelity account, your Schwab account, you don't want to do that. That's not the user experience that you have. And
there's a reason why you're doing it.
If going to Kevin's silo and making that investment is that process, that's actually more complicated than the non-digital piece of paper I can sign, transfer money, and now I did it, right?
They're making it easier with Etherlink, though.
So yeah, every blockchain is doing it in their way, and every institution is doing it on the blockchain they want to. But in the regular world, when things have been digitized in the past, or when you participate, like I said, when I go under my Robinhood app, I don't care which clearinghouse it's going through. I don't care which stock exchange it's in, or even which country that stock exchange is in. I just know I'm able to do it from my Robinhood account, and it gets routed through all sorts of services that exist. Right. And in the crypto space, it's actually pretty similar. Like when you go to a centralized exchange, a lot of the centralized exchanges use Fireblocks on the back end, which is the service that like partitions all the wallets for you, just things like that, big one. And then might go to BitGo or Prime Trust or whatever, where like your
they
money
don't
is
exist anymore.
Prime Trust, maybe not, but
whatever.
Your Bitcoin might be held here or there, or US dollars, and these backend systems exist, right? In the digital securities RWA space, there is nothing like that yet. The only way for me to buy from Kevin's silo is to go direct, or if I'm an institution and I want to provide Kevin's product to my people, I have to go direct to Kevin through like API interface or something. And that's a great proof of concept, but that doesn't scale, because as a financial institution, I don't want to have full-time employees constantly managing and dealing with APIs and having my products break and everything like that. I want to have one service that I utilize that gets me access to all the things I need to do. And that, for our space, is an orchestration layer called FinP2P that Onera actually created and manages and runs, that makes it so that every product that Kevin has, if he's connected to that network, he can choose to allow to distribute through that network. And any institution that wants to allow their customers to buy products from that network will be able to choose which products and show that to their users and have them purchase it. And they'll all have agreements on how they split the fees and who makes the money and all that in advance.
Yeah.
And that's what they've built. So that was one of the most important things, I think, for our space that's actually been developed over the last few years. I went to London to basically be at an event that was discussing that with actual participants. And the actual participants are, I'm trying to think of which ones have been publicly shared, but they are groups like Fireblocks I mentioned, but more for the financial institutions like JP Morgan, US Bank. I'm trying to think of who's been public. I'm not going to say other names, but think about names at that level, and smaller or smaller groups, but are new startups like Archax. Archax recently, remember when it was a big deal that BlackRock tokenized a big fund, right?
Yeah.
I didn't think that was that special. And the reason I didn't think that was that special, it was a great marquee moment and a cool proof of concept and whatever, but it was like a $10 million minimum investment. And I think there was less than 10 actual participants in that product, right? Like it was something like that. Like it was like 5 to 15 participants in that product, right? And that's cool, but that's not what we need as an industry yet, right? I'm not saying that you have to go crowdfunding, but you have to make it more accessible. And so Archax, like a month later, obviously didn't get as much love or whatever, but the Hashgraph, Hedera, and I don't know if they go by Hashgraph anymore, they go by Hedera or whatever, was the blockchain that was used by Archax to tokenize another BlackRock fund. And that one had much lower minimums, and people are actually able to buy it not just on Archax, that exchange that's regulated in the UK and fully compliant and legal, but also groups that have connected through this Fin P2P network are able to access that product because Archax connects to that network. And that's pretty cool. So a small exchange startup that's providing real world assets in England and the UK tokenizes a BlackRock product, and that product is now available to other institutions that want access, whose customers want access to it. That's pretty rad. Now that's the first time where you're actually able to.
Yeah. And I like the analogy you used with the like gaming and languages. I was playing this one of those like games where you play in like clans and with people all over the world, and you're kind of working together, but also for yourself and that kind of thing. And like it was, and I recently switched from one clan to another, but like the clan that I switched to, it's German. It's all German, like the description's German, everything's German. I was talking to somebody else, like, yeah, I don't know if I want to go over there because they're all German, I'm not going to speak it. But because of that auto translate feature, unnoticeable.
Yeah.
And it's so like, oh yeah, of course we have this stuff now, but it's like, and I'm thinking like, how much does this open up? Because it's such a good, the only reason why I play this stupid thing is it's such a good analogy for a lot of stuff I do that actually matters. And I just think like, this is, like we've opened up a world that's so much stronger and so much more accessible to get other. I think of Plaid, Plaid with the credit card processing and all that. It's connected to everything. What made them great? They did a thing that was very simple, but no one was willing to do it. They like before, like every bank had their own, experience of like having to connect their software or whatever API so that you could, or if they even offer that, like most of them just like, no, you have to go to our bank website and then that's how you can, access your funds and that. Yeah. They went through and they reverse engineered the UI of every bank website. And it's like a few thousand in the US. That's a lot, but you pay the people to do it. That's their job. They get it done. And then it's all connected. So the merchant just installs the Plaid, and then the people find their bank, it works through the whole thing, and they have people, monitoring, updating, and all of that. Yeah. No one else was willing to do this, but it's like they always could have done it. And that's what made them so valuable. Now we have it.
Company. Yeah. You went from like in the fintech world, right? There was this thing, and I'm talking about, 15 years or so ago, there was this really cool graphic that one of the groups put out called the unbundling of a bank. And it actually showed the consumer homepage for Wells Fargo, and then the business homepage for Wells Fargo. And then it had little lines pointed at every single link on the website and then off of the screenshots and the graphic around it were logos of startups who were trying to take over that little piece of every single bank. And it was like,
think I found it.
for home loans, for cars, for different things, right? Yeah, I could probably find it and maybe bring it up on screen. But it's great because what ended up happening to all those companies, the ones that disrupted all the different types of loans and things. Oh, you're sending it to me. Oh, this is actually different. This is cool. This is a cool one too. This is a different one. It doesn't show the home, the actual thing here. Let's see if I can.
I saw another one, but this one looks a lot better organized, I feel.
It's awesome how this space is becoming global so easily. I mean, that was one of the biggest things during COVID that I felt with like Clubhouse, was just being able to associate. Unfortunately, it was still all in English and you were only talking to people in English, but at least you were talking to people around the rest of the world.
Yeah,
right?
And I think that a lot of people in the rest of the world speak English too. It's not their first language; it's tougher and stuff like that. So yeah, this is a cool way of visualizing it too. It's not showing directly the homepage of the bank, but as you can see, you go to consumer payments, and here's Cash App, Venmo, TransferWise, Remedy, and then you go to investment banking. There's all the companies, consumer deposits,
in particular, the stuff you
lending.
do in person.
Yeah.
Yeah.
So
like you go to a bank in person,
right?
They're just telling you to go online now. They don't tell you to like, oh yeah, I'll take care of that. Like stuff that would save their job if they were just the ones that at least some people want to do it. They're just like, just go online. It's quicker. It's like, that's what the bank is now. It's a place where you go and you ask a question and then they just don't even listen. They got their AirPods and they're just like, go online and do it. Faster online. But you didn't even hear it. Go online.
It's just a version of customer support now. Like it's not even, they're not there to do the things. They're there just because they need to exist there for a small percentage.
You know what they will become? What they will become, and this has already kind of been the case for many years in different banks in the world, where it'll become authentication centers, where to secure your identity, to reiterate that like you are you, like this is an authorized place that will, and like I know for like if you want to get, there's like a Bank of Cyprus or something, like you have to actually meet with the president of the bank so that he knows you or she knows you. And then like that's how you build trust in those areas. Because otherwise, like, well, look, we live in the middle of the Mediterranean. We got a lot of fraud for centuries, thousands of years going on. If you want an account here, and like people have been doing, like they invented investment banking, in the ancient world, right? Or I mean, they invented identity fraud in the ancient world. So like it was a lot easier back then too. So yeah, I got to know who you are. But like we're gonna have like a move back to that where we're at these interpersonal relationships. Whereas for a long period in the middle there, for decades and all growing up and everything, we've just known it as like, look, it's all done electronically. Criminals haven't caught up with the electronic enough to warrant that we would have to know each other as humans to authenticate one another. And, if there is identity theft, it's on you to figure it out. And then, and then eventually, there's different underwriting and insurance products that'll cover you for that small margin of people. It's worth it enough for us to make money off of the automation and, pay off the insurance premiums for sometimes when there is fraud than it is to prevent the fraud entirely by completely reinventing the system. But because of these technologies, which are inherently, like that, it puts it to an extreme. It's like you hold on to your keys. That is your responsibility. I don't care if someone strong-armed them from you. You hold on to your keys. It's like, oh, you don't trust yourself with that. Okay, well, you can do it another way, but someone could impersonate you. So it comes back to trust networks. And it's like, well, maybe you should have a thing like a bank and have that bank manager know you, because if they're the only one who can override stuff, then you want them on your side to be able to act rapidly.
Well,
yeah, but I'm having trouble
trusting.
Yeah, your Apple account. I'm having trouble trusting a guy wearing a Duck Hunt T-shirt. So what can I mean?
Oh no!
I was actually
master.
I saw the top of the gun, and I was like, that looks like a Nintendo gun. And then you adjusted. I was like, oh, it's a Duck Hunt shirt. That's rad. That is really cool. I had to make a dumb joke and take away from the important thing you just said. But okay, so 1,000,000% all of these things. So going back to London,
it's a
right?
penis reference. If you haven't gotten the subtext, Master Zapper, and there's a picture of a gun. Penis. See the.
I'm gonna take this clip. I'm gonna take that clip and like remix
Kevin likes
it.
old archaic things.
So So here's what I'm gonna do. I don't think I'm actually
Not
gonna
my
do it.
penis.
Here's what the idea that's coming into my head is. I'm gonna take that 5 seconds of Kevin saying the word penis a bunch of times, and it's a penis reference or whatever, and we're gonna get like a techno beat going. We can be like a techno beat
Completely on the
going, and
nose.
a video of Kevin just saying penis, penis. It's a penis reference, or right, like an Master Blaster. You know, so, all these things.
We'll get a lot in there too. Don't worry.
That'll be the new theme for a DGB show.
As an NFT. Oh, the new theme song. Every time Kevin's on the show. Or just
and the disclaimer comes after that.
You know how like on radio shows they'll do segments and they're sometimes like kind of cheesy and they'll like have some little theme song like it's this guy coming on to talk and it'll be like
Rakin and Goran in the morning.
Yeah, exactly.
Coming at you.
We're gonna every time Kevin comes on the show, it's gonna be like a weird, like burr, 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 penis, whatever. It'll be great. So stupid.
Or you bleep over somebody else's vulgarity with the penis audio recording.
Recorded and spliced up into a whole bunch of splices.
Yeah, you were smart.
I'm telling you, you got to make this into a published podcast. That's where all the people are gonna, because people are looking for podcasts, and they will more in the future for crypto. Now it's because the season is warming up. And it's like, oh, I got to catch up on the crypto. Well, I'm a podcast guy. That's how I get all my information. They're searching on their phone, and they should find because otherwise they're gonna, unless they were here live, or unless they are subscribing to DGB show and all of that.
We have all
not we talked about this. Because if you do, try searching for it on YouTube, because other stuff comes up. Like you gotta, it's all about the right words and using alternative words for it. Because
we're gonna start putting it on DGB on our website on dgb.vc. Also, we're gonna do some interesting things. We will. Nate
if
is
you
actually
put DGB Hang though. If you are searching for YouTube, if you put DGB Hang, then it'll come up. But if you put in Draper Goran blockchain, you'll find Draper Goran home. Yeah. You'll find other stuff. You'll find interviews from years ago. Yeah.
Wait,
you got a lot of content, Alon.
I can't say it. I'm not going to say things out loud, but there's a few domain names I might have or will buy that we should be just mentioning on the show. Like go to XYZ to see the show too. We could do
that. Reminds me, I have a lot of domains I have to cancel.
Always.
Welcome to the club. Okay, so let's go back to we wanted to talk. So I was at this event. Now I've explained the orchestration layer stuff with Onera, and that's important. And I was at a private event for that with a bunch of institutions. It was fucking awesome. That was really cool. I also mentioned early that I somehow maybe I'm just getting old. Maybe I was coming down with something before the trip or something that I lingered or something, but I was just jet lagged. It was crazy. I've never in my whole life, I always do make trips short. I'll take the red eyes. I got no problem powering through. Then I pass out on the way home and recover for a day or two afterwards. This time I was so freaking tired. So I was going to sleep at 8 o'clock every night there. But cutting to Digital Assets Week London event, the reason I actually like that event is because I mentioned earlier, it's not, the super weird crypto hang, which I love and appreciate too, but it's kind of the opposite. And for that reason, I kind of didn't like it in the past, but I kind of love it because it is, what you're getting and in advance what to expect, right? I didn't go there and go oh shit, none of my friends are dressed like Indiana Jones and like in their Burning Man costumes here. But I wasn't expecting that, right? No, those are fucking awesome, and some of my best friends in our industry do that. So I'm making a joke and kind of making fun of them, but I also miss them and wish that they were there in some ways. But the reason I go to this event is because it's the suited up crowd. It is the institutional players, and the people who aren't suited up are still dressed fancy in my opinion. And they're the digital assets people or the crypto people from those big institutions. Right. So I moderated the panel, the investor panel, which was the last panel of the whole event, which was I think their way of wrapping things up, but also trying to keep people in the room when they have investors on that panel. And it was the investor panel. And on that panel was was the head of Fidelity's group for investing in digital assets and investing in companies for digital assets. Barclays, their counterpart at Barclays, and their counterpart at Aberdeen. And Aberdeen is a institution and sort of wealth manager who has billions and billions of dollars, hundreds of billions under management. So these are legit groups. And we got to end the conference with a panel about what they're looking for and who they invest in and how they invest in companies, and where they plan on going. And it was really freaking cool. So as I was there for the couple of days, there was a few things that were kind of looming, in my opinion, that my opinion formed in a few different ways. But like, it was more institutional focused event. Of course, there were the people like us, the startups and the investors who come earlier than the institutions and stuff. And to me, it's all about those opportunities, right? And those institutions are looking at some of our companies, even companies like Onera that are, have been going since 2018, that are actually selling to them and stuff, and thinking about those as early stage companies to them, right? We participate years before any of those people, but then they're also looking at all the rest of the people in the room. And there were a bunch of people there that were like early OGs in our space, right? There's the Tokeny team. There's the polymath team, the polymesh team is what it's called now. They were there, us and Onera and some of the others. Like, so there's a good mix of all these old school people who are there, but also a lot of new folks who are there and a lot of institutions. And I felt there was a pressure, right? I think that there's this moment, the reason why it feels so different today, and I still think it's crazy early, but the big criticism is that we go to these conferences every year. The banks have been sending people to these events since 2018. It's not like it's the first time somebody from Citi or something is going to one of these events. They've been participating and paying attention. But for the first time ever, people are coming to this event, not just with announcements of we're participating in the space by these institutions, but post actual POCs, proof of concepts, like people have actually done things now, and separate from that, I think there's like groups like, let's say Barclays, right? Who's way more old school and more traditional bank coming to these events. And they didn't explicitly say it as a group, Barclays, right? But a lot of the institutions are looking at the space. And in the last year, just pointing at Bitcoin, right? Even though this event is not a Bitcoin event, it's a digital assets, real world assets, whatever buzzword we want to use event, right? Regulated assets. The groups at every bank that are focused on blockchain are now getting pressure from above them to actually get shit done, where it was the opposite. They were banging their head against the wall for years and years and years. And now in the last year, there's been financial
They don't want to miss the cycle.
Yeah, well, they've been financial institutions, not just like, I don't think it's missing the cycle. I think it's financial institutions this last year, and Fidelity is probably one of the best examples of them, have just generated more revenue from ETFs than have been ever generated by ETFs in the history of ETFs. Thanks to Bitcoin.
ETF.
Thanks to Bitcoin. No, I'm talking about any time, and take any launch of an ETF and 1 year amount of time on an ETF.
Okay.
And so, and I might be exaggerating in some ways because I don't know.
ETF is struggling. That's been struggling.
Okay.
It underwhelmed expectations, but we could say it is possible that they probably went much farther than they would have otherwise done if Bitcoin ETF hadn't been as incredibly successful as it was.
That's not even my argument.
Well, in all fairness, most people can't afford to use ETH, or at least they couldn't last cycle. And the L2s have more or less come in during the bear market. And the L2s can absolutely afford to have people come in, and people can afford to actually do DeFi in these L2s. And Ether, things like Etherlink, I consider an L2. And I think we will eventually
see an L2.
L2s.
Yeah.
We will see a wave of people in L2s. The problem is right now everybody's talking so much about Bitcoin and building on Bitcoin that
you know what? It doesn't. You're getting into the
Talking
nitty-gritty
is
of the
where
crypto world.
Yeah.
Hold on.
Well,
it is.
Wait,
here's
sure.
where I'm going. Just because I'm not. We can dive into each one of these things, but all I'm saying is a high level. these institutions have gone, oh shit, look how much millions of dollars in revenue and AUM all these groups now have. And that's because they participated in blockchain, right? Like one of the dudes at the event actually said, here's how early we are. And he explained how one of these institutional people went to some event and whatever, and was talking about how wonderful the event was. And then went, the organizers of the event gave every single person $50 worth of blockchain for coming to the event. And he was using that as an example. That's how early we are. The dude didn't know that there is a difference between blockchain and Bitcoin and what blockchain even means or what Bitcoin or crypto even means yet. But the banker was like, what a great event. We got $50 worth of blockchain, right? So that's how crazy early we are.
Aww.
But okay. And maybe he misspoke and is just bullshit and some platitude.
Hopefully he doesn't watch your show until insulted.
No, he just, don't be insulted. The fact that anyone
in those early crypto, early Bitcoin conferences,
they used to give away Bitcoin. They used to give away Bitcoin.
They gave away 800,000 sats. That was a thing.
I ran
a lot.
The
they just give out a piece of paper
in history up until that point when we gave thousands of people $100 worth of Bitcoin. But next part, right? These institutions are actually putting pressure on their internal teams as what's next. And now the fact that they've done proof of concepts and things like that, they're going to start bringing more assets to the table and do a lot more. And they're investing in groups in the space. Mm-hmm. And I'm not talking about, DeFi stuff for the most part. I'm talking about, the blockchain, the regulated asset stuff, and the RWA world. That not the RWA in terms of the buzzword in DeFi, because I think that's predominantly bullshit. To be honest, because
I don't even hear about it in DeFi.
Well, people in the DeFi space are going, "Ooh, we're gonna get access to RWAs through certain protocols, certain things," and it's like DeFi doesn't need that.
Sounds like they're just trying to appease certain investors rather than like a practical. Like, there's no demand for that stuff amongst DeFiers. There's a reason why. When I first heard DeFi DeFi started rising up before. Well, before DeFi became like a term and let alone start to grow to the level that people did not anticipate that this would become $100 billion thing in 2020. Before that, I remember in 2019, the big term that everyone was talking about was STOs. And that became, and we still hear it sometimes, but it did not. And the reason is, and that's my same concern with RWAs, that what makes it so early is that you need like a agreement and alignment amongst those institutions that right now have jurisdiction over those RWAs, that people can go be put into jail for doing the wrong thing with them or claiming something that wasn't or whatever. So that's been the like if you like you tokenize a plot of land, it's well great, but I mean the government that governs that has to recognize, which a few do kind of, but even if you do it through then, like with all of that, I mean, if you want to sell to an international audience, everyone has to agree with that. Okay, we need international courts agree. Like it's so to me, it's like I think the instinct to move towards real estate, towards real world assets, that it was always like immediate because everyone knows how much value is there, and we know how hard that value is and what it can do to collateralize, to bring about other types of derivatives and values, sure, but it's like it's the hardest nut to crack. It's probably to me it's like the last thing we get to in the blockchain world. It's not a thing that leads to the other stuff. And so before that happens, we have the volatile world of crypto based assets, and that's what DeFi is. So getting more sophisticated with that, I think is still going to be the future.
It's a separate game and it's a different thing. And similar to why crowdfunding is not going to work for 99% of use cases in the short term are the same, especially it's regulatory, but it's also just hard and complicated. And even if we fixed the problems that like the orchestration layer that we're talking about from Monero and things like that, if we fixed all of those and it was easy to participate, it's still the hardest thing to sell. And what people needed to learn is when you said STO, they were just trying to copy the ICO kind of game or take something public, or what they call that is issuance or origination of an asset, right? before you do any of that, there's assets that already exist that people want access to that are billion-dollar markets and opportunities and things. Those things should be digitized first to make those more efficient before you go, Kevin's startup should be tokenized, and we're going to do it in this way, because you're making it, again, harder to participate in than the traditional world. And startups aren't really built or made to be liquid anyway. It's actually will hurt a startup to be attractive.
So the way we did it, I think it's a good point you make. The way we did it, and the way we were advised and everything and all that, we have a non-shareholder foundation that's based out of Panama, and we chose Panama because they were one of the very few jurisdictions in the world that let you have a true non-shareholder foundation, a true one in which there is no head. Okay, so there's no equity being distributed to anybody, and there is no head of it. So it's kind of closer to like a decentralized like DAO. It's like the brick and mortar equivalent of that, which means we could put all the value in a token. And it's like, well, that's the only way we get paid. It's like, oh, you mean you're not, well, don't you have equity? No, we don't. And nobody does, actually. So all the value is in the token. And it's like, we didn't need any real world organization to say, okay, we're tokenizing this and putting it here and we have that government. No, we just did away with that entirely. And we said, look, the people who are going to be consuming this and utilizing this are okay with that. Okay. No, we don't get the protections of a real world jurisdiction and their courts and their and all those laws and all of that. We don't get those protections, but we're okay with that in this digital world. Okay. So it is a different thing. It's not
what you're doing. But what you're doing. What you're doing is a crazy innovative thing that a small percentage of people in a certain industry are going to resonate.
A growing percentage.
Right? A growing. But I'm saying that's the thing. But I'm talking about if your company, if your product was to sell to help people distribute RWAs or to issue RWAs or whatever, going to that group of people is a very small and hard market versus there's an existing market with really good products. And what we've learned with crowdfunding and with tokenization and all this stuff is we can do it. The technology exists. 1,000,000% I can show it to you and we can do it. But it doesn't mean that the thing we're tokenizing is a good enough product that makes people want to buy it. And there's plenty of really, really good products out there that what we have to do as an industry is show, I can show you how either I reduce your margins. If I'm if you're one of the players in the space, can I, or not reduce your margins, but increase your margins
costs,
by reducing costs, right? So can I reduce your costs and make it more profitable for you? Or can I get you more distribution, make it easier to purchase? So if more people are purchasing it, that's a good thing, right? More assets under management or whatever. And essentially all those people have to do is the calculation that everyone does in every single thing they do in their whole entire life. But to simplify it is the juice worth the squeeze? Is the pain in the ass of integrating this new thing worth the revenue and the future by doing it? And there's people who are like Fidelity, who are fucking wild, bonkers, insane, and ahead of their time, are like, we're going to mine Bitcoin because we can see into the future, right? And those people, those investments and those crazy experiments paid off in situations like now, because of all of the ETF issuers, they're the only ones that custody their own Bitcoin, right? Because of the things they did in the past, which means they're not giving away a majority of their margins to Coinbase to custody their Bitcoin for them, right? So that's a huge deal. But most people are not going to. They're financial institutions. The startups are going to be the innovators for them, and they're either going to integrate those startups or buy those startups, right? And we're those worlds, and we need to think like, is tokenizing mortgages a good idea? Not until the moment you can prove that it will actually make origination of a mortgage or servicing of a mortgage more lucrative for the trillion-dollar, billion-dollar industries that exist that are already doing it, right? So let's not go down. Let's start with the big institutions, right? So the thing that BlackRock did, I know I shit on it in a way, was a cool thing. And it worked for certain people, but it didn't make it easier to buy those products, right? It made it harder. Right. But certain groups might want access to that product. Cool.
It opened
Now,
the door. It's symbolic. I feel more than anything else. But it's real money. It's not like it's not symbolic money. That's real billions and billions of dollars out there. But
sure,
that's what made it so momentous. Yeah. So
but
it's
$1 billion compared to a U.S.
Yeah.
$7 trillion alternative investment market in the U.S. alone.
We'll look back at this level, like the ETFs that have been sold by BlackRock and the 20 others, and we'll say that was so cute when we thought that was like a big deal and a big moment. And because it's just the first thing. It's like trying to get people to come into the water. They're like, no, it's cold. It's like, no, it's fine. Just come in. You have to trust us. Like, no, it's like, okay, come on. It's like, so fine, I'll put my toe in.
Hey,
the Bitcoin ETF is putting the toe in the water. That's the equivalent. It's financial institutions it's the safest thing they feel that they can do. And they did it. And same with the investors, the people who've subscribed to these things. Like, I mean, it's to them, it's like they are very, very uncertain about the crypto markets. Even if they believe it's the future, they don't believe that the volatility is at a point such that they can't get totally ruined. Because it's not too long ago that we saw. Actually, our biggest collapses were recently. Luna was recently. Yeah, that was
the general public hasn't learned about liquidity pools, and volatility is a blessing for fees on liquidity pools.
You know what's really unfortunate, and what I feel is the biggest regret of what I see, and I never participated in was it Celsius? I think it's Celsius. Or am I thinking of one just like the one that went away? It was Celsius. I'm pretty sure it was.
Yeah.
That like they did, because they did like they made a centralized kind of thing where you can do your different crypto services and all of that. But like they were building Celsius X. And it wasn't ever released because they went under before that came out. But I was very much looking forward to this, and I felt it would have like bridged the gap that we have between DeFi and CeFi. Because what they were doing is they were going to sell a CeFi product like to the clientele and the institutional people that they were getting into and all of that stuff. But it was to source from these DeFi pools in different ecosystems. So it was going to, for one thing, make it very convenient.
Hey,
like you have to onboard to different ecosystems, but also it helped DeFi. Stop talking
about Celsius. No. I was going to say, stop talking about Celsius X and start talking about Return. So Return Finance, that's actually one of our portfolio companies, a DGH portfolio company, is licensed in the EU, and their product is going to be a simple product, like a simple app that gets you access to DeFi yield for people who don't want to have all the different wallets and don't want to, experiment in DeFi. They'll just have the option within the app to choose which products that they participate in a very simple way. They'll deposit euros or dollars or whatever, and they'll just do it, and they'll earn yield and be able to switch between them and do all that stuff.
They've essentially embedded in the back end.
Similar, exactly what you were just describing, Kevin. So
so we're coming back to it. I mean, you can't stop it. You can't stop it. You can't stop innovation and what people want. So but yeah, I mean, in the end, that's where the money is. Even if it's like, but we don't know if our clients are necessarily going to trust that we have DeFi under the hood. It's like, well, why not? First of all, when things collapsed in the last cycle, you know what survived? The DeFi. DeFi was the one thing that stayed the same, and not just like your Uniswaps and like Compound and Aave and all those. Maker did fine. It thrived in it. In fact, when it was like a CeFi venture financing collapsed completely, what went up was DeFi investment. Like it was and people didn't notice because it was so slight, and we were all looking at the big collapse of like the 95% of overall. But it was people were realizing, hey, like the people in the know were realizing, this is actually smarter and stronger and safer, and maybe that's why all these nerds are interested in it and telling us we need to go in that direction.
Well, it turns out that all of the politicians and naysayers were pointing at Bitcoin or Ethereum or crypto as a bad word because they are conflicted for whatever reasons. They're conflicted. I won't go down the rabbit hole this time. Maybe. It turns out it's not that crypto can't be trusted. It's not that even let's step aside from crypto and just look at some of the biggest scams in the history of financial markets. It's not capitalism that can't be trusted. It's not the current environments that can't be trusted. It's human beings. They're greedy human beings, or sometimes mistakes, but mostly greedy human beings who take advantage of people who can't be trusted. And it's never been, you know, right? It wasn't what's the dude?
Or negligent human being, not even
negligent. Yeah, negligence is a part of it, but they, you know, at a certain point,
optimistic. I think that's
well, at a certain point with some of the collapses, right? Let's say it wasn't a straight up Sam Bankman-Fried, like straight up, like he knew he was upside down, greed kind of thing. Let's say, but the negligence, the biggest parts with negligence that have come back to bite are because people do realize they were negligent at some point, and then they try to dig themselves out of the hole because of greed or because of ego or whatever reasons they think they can fix the problem, and it just gets worse, right? I think that's kind of what happened with Celsius. I don't think they went into it or that they were scammers. I think that they went, this yield from all these places is just going to continue to grow. We're going to keep doing it. And at a certain point, when certain market conditions happens, they get upside down. And instead of putting their tail between their legs, no, we majorly fucked up and maybe we broke some rules, they tried to dig themselves out of it. And then it becomes an emergency.
I really feel the last cycle collapse came because of, I mean, it really, you can trace it all. Like these big companies, of course, they've been around. They know that these cycles have a boom and bust. They know that people get overexcited about Bitcoin and then it consolidates and then the altcoins fall too. Like, so they did prepare for that. But what they didn't prepare for was, because they engaged themselves in it, was Luna going to zero. They anticipated maybe a collapse of Luna and they built their finances around that, but they didn't think it would go to zero. They thought like, well, if it goes down even 90%, we'll be okay. But going to zero is and that started a chain reaction between Celsius and FTX more than anyone. And you know, who the hell knows what happens with certain others because they keep themselves shady on purpose for this reason. But everyone suffered on that basis. And, you know, the chain of reaction came from that. So, you know, there was some stupidity there.
There was a lot of dynamics, though, because, I mean, here's the thing is we had the DeFi platforms, right? In 21 and 22, you had these tokens. One, you know, a lot of DeFi platforms were brand new, coming out, right? Not only that, but during COVID, we had the influx of consumers just getting money and staying home, getting free capital, where they injected a lot of this into the crypto space for gambling purposes, right? And then what we saw is these DeFi platforms create massive inflation through their token supply as they dump them into the market, which is going to have downward pressure on price. But the thing is if you were in good protocols, like I was in early on Aave. You know, my average price on Aave is like $54 a token. It's still $142 a token right now. I mean, like it's
kind of like people who point at current market conditions are like, oh man, you must be wrecked in Bitcoin.
Know,
and you're
right?
like, are you nuts? Zoom out.
You're crazy. High of 2021. But the thing is like that's because of the inflation of the token supply dropping the price. But now it's fully, you know, largely distributed. It's like we're over time, and I got to bounce to another meeting. But I mean, if you guys want to stay on and stay alive, you guys could keep going on these rabbit holes. Which I'm totally cool with. I think Rankin, you're an admin on this, so you could keep rolling. But I wanted to I was gonna say something, but now I can only think about Bitcoin. You know, going back to what was that? Buy more Bitcoin.
Buy more Bitcoin. Well, here's the thing that's crazy, actually, and this totally, again, I'm just going to go down another rabbit hole. Fuck it. The crazy thing about, is there going to be another crazy bull market? What will that look like? How are things going? The nutty thing is that people, you know, again, this is probably the longest I've ever gone without talking about Lunar Crush, right? On one of these live streams, but like, go look at the charts on Lunar Crush. One, they're epic and amazing in certain ways. If you look at, you know, certain tokens, certain things, but I'm just talking about Bitcoin for a moment. Bitcoin is been hovering around 60K. Like, I don't even know what it is right now. It's 62K, right? And you click on it and you just look at the metrics, and over the last few months, it's just been hanging out around here, right? If anybody a year ago or a few years ago said Bitcoin's going to be hovering where it is today, and nobody's going to be talking about it because it's not going to be exciting or interesting on the internet, like the all-time lows in terms of like people discussing it in terms of percentages, like we would all be like, no fucking way. That's crazy. But what people have now gotten used to, it's kind of like politics and the weather reports and how they have to get more extreme to get your attention. But like people are just like, this is just what Bitcoin does. It's crazy. And so now when Bitcoin was at like, 70K for a second, nobody really talked about it that much. When it's at 60K, it should be like, everybody should be like, holy fuck, this thing was created out of thin air, 10, 12 years ago, whatever it was. And now it's worth this much. Like, that's the greatest growth in the history of all things, right? Like, just zoom out even 6 months or a year, it destroys all other markets, right? But like, again, nobody's talking about it. So if it does get to 100K, will people give a shit? We will, but maybe not a lot. I don't know where it has to get to, where the chaos has to get to for people to talk about it. And that's both a sign of a mature market, but we're just like jaded as human beings to this space. And I don't know what that's going to do. It means it's over in a way. And we need to go to...
This was an unusual cycle, though. This year has been unusual. So for one thing, people didn't anticipate the recovery of Bitcoin to this price range at this point in time, at that point in time that it did. They were probably maybe saying, oh, well, that'll come probably right now, like this October of 2024, because it's like, all right, it's 6 months after the halvening, which is usually what we see or something like that when we see the scale up of mining reacting to it and all of that. And then it's like, after hovering at a very low place, that people would get that contrast between what we would have seen maybe back then, which would have been maybe a third of this price or an eighth of this price, suddenly back to the highs. And that anticipation, plus people preparing for it, funds preparing for it, miners preparing for it, that would set off like that explosion of early exuberance where people are like FOMOing and buying altcoins and doing all that other stuff and investing in this and that and the other, and
I'm also
more
exaggerating. I'm exaggerating my feelings a little bit too, because...
But you're right, though. No, it's not wrong.
Well, the reason I'm doing that is because we have our industry and like the crypto Twitter crowd, whatever, which is like a tiny percentage of people who participate in our industry too, but we give them a bigger weight than they actually... not that they don't deserve, but maybe we give it a bigger weight than they deserve. And then there is the rest of the world who's like kind of paying attention, not really paying attention, participating. And then there's like those institutions and things like that, right? But everyone outside of the crypto bubble is like not really giving a shit right now that much. There are the institutions of people that are preparing, doing the things and all of that, and who are participating, but their entry, I'd say a majority of them, there's certain ones that are crazy like Fidelity and that were way early. And I would, I should replace crazy with they have that they made their own predictions and made bets way in advance, and they were ahead of their time, because saying crazy makes it like I'm talking trash, but I actually think they're it's a good thing, right? And then there's all the rest of the institutions, and most of them feel like they got permission to participate, if not during the ETF times, maybe in the year prior. So they're all brand new, right? And so them getting to 150K Bitcoin is like a 4x, a 5x maybe, which is still crazy, which is still like makes them the best asset managers in the history of asset managers if we start averaging things out over time, right? But we're just used to that, and that's not insane, but it is insane, right? Because again, these people are talking about volatility in the realm of 5 to 10% on public stocks. If things get 15%, it's like, holy shit, the world is
but a lot of them
and we're just going like, we think Bitcoin could double by the end of the year. Doubling your money in something like that, like, just doesn't make sense. But here's the beauty of it that I think will long-term sustain some interesting things. these hedge funds and institutions who are putting 1 to 3% to 5% of their whole fund into Bitcoin right now are paying attention, but it's like 5% is significant, but not crazy. But if Bitcoin does what we think it's going to do over the next couple of years, it could go from 5% to 25% of their portfolio, like within a few months. And then they have no choice but to go, holy fuck, what do we do? That might create pressure to sell and stuff to put it into other assets. But also their people are going to go, why sell if it did 5x in this period of time? What's it going to do in the next period of time? It'll probably take, exponentially longer to keep doing those things each time. But I think that's where then people have to treat it so seriously, then look at our industry, then go, why aren't the rest of our assets this easy to buy and sell into also? And now they need the technology that conferences like the Digital Asset Week event that I spent last week trying to sell people and convince people of. And so it's like, it's perpetuating.
Then they'll learn to sell an NFT asset that has a position that makes them money while they hold it.
But again, the word NFT will never be discussed. Nobody will.
No, it'll be called some digital.
Yeah, it's a digital investment product, a digital something rather, whatever. But that's where it's interesting. But to be honest, if the end game is utopia and we're today in 1984, again, exaggerating,
Utopia.
but let's say there's somewhere in the middle is where we are and where we're going, right? All of those are steps that are required, in my opinion, to make people more comfortable, for things to become digital, for things to be what we want, and then a certain flippening to where people actually own their own assets and people actually go more deep into DeFi, which if we could circumvent the whole middle grounds, I don't like taking baby steps. I would much rather just plow through, but it's just not going to happen, right? In the short term, in the way we want it to, because again, I can't own my house digitally without providing KYC and all this stuff. I can't tokenize my house because I turn it into a security instantly. I break securities laws. I'm in America, and all these things. So I've got to drop to my call. Are you guys going to keep going? I'm going to drop.
Yeah, we'll talk about you.
Okay, talk trash about me. I'll see you guys soon. I'm signing
Text
off.
Me.
Make sure to hit the end stream button.
We have matters to discuss.
I'll text you.
Hit me back.
Guys.
So Kevin,
peace out, everyone who's watching. Brandon Colley actually was saying hi and said he's going to be in Santa Monica for LA Tech Week. I may go to some of those events. He's sharing an event, but go just on LinkedIn to him and find this link for a networking event he's going to, and it's going to be a big topic, which is cool. I'm going to be there is a cool event happening. It's like that I think will be interesting. I know some people will be like, I don't like 100% Bitcoin stuff, but there is a Bitcoin event happening next week. I think it's next week in LA called Bitcoin First. I'm going to be at that if anybody else is, but I'll talk to you guys. I'm hanging up, but I'm not going to end the stream. You guys can end the stream. Peace.
Sounds good. So what's new?
I want to meet whoever made Luma, LU.MA, because it really took over with events, especially for all these blockchain crypto events that I go to the, like, everything you do is a Luma event, and
what
like it's all about LU.MA. They do like that. Okay. So, but it's like, and I wouldn't have known about it, but it's like any event that someone invites you to, they send you a Luma link. Any crypto organization or whatever, any mixer they have, they send you a Luma link, and you have to register in advance a lot of times, and like make sure you get, and it's just like send me the Luma, and it really took over very quickly. To which, like, that's the standard, that's what you do, and it's like, how did they do that? I mean, how do they take over from Eventbrite and a million other things that do this?
Yeah, I haven't used it.
But somehow, I mean, I haven't seen anything that like makes it so unusually good. I think it's LU.MA. Yeah, that's
good organic growth.
That's what it is. Yeah, that's right. But yeah, I mean, it's but I mean, there's got to be like some good consolidated strategy there, because like, like more than just getting a few events to use it, like to the point that it's just the standard. It's crazy to me. But yeah, so I'm curious about that. Anyway, I was looking at the price of Bitcoin. We are at 1 year ago. It was well, from a year ago, it's 2 times the price of where it was a year ago.
Yeah, don't remind me.
So-
I was thinking about selling some more bank stock and buying more Bitcoin. Unfortunately, I didn't.
Bank stock.
Yeah, so I
Well,
own
you know,
some
you could
bank
take that Bitcoin, you could collateralize it, you could turn it
Yeah.
into TZBTC, collateralize it, and then put that on Tezos.finance, and then you can borrow, you know, USD coin
Yeah,
or USD Tez or USDT Tether, or Tez, which now has record high returns on
Well, you know,
staking.
I was waiting for bank stocks to recover 30%, the 30% that I lost, and in the meantime, I could have just put in Bitcoin and doubled my money versus keeping the bank stock.
Mhm.
Lessons we learn in life. That's tough sometimes, you know.
Find it hard. It's hard to find.
So-
but
Yeah.
the
So
next,
what project
yes,
you're working on? What's the website right now that you're working on? Tez,
right now, Tezos.finance, Tezos.finance.
Tezos.finance.
So yeah, so now we're working on so there's some updates coming, like there's a new new version of the user experience. We're gonna it's almost ready. But that's the latest we've been working on. So I think that's going to be a very important factor. I did a AMA in Reddit like 2 weeks ago, which some very good questions were asked. I should probably link that at some point, but you could find it in my Twitter.
You're 100%.
Yeah. So and then
100% on Tezos.
100% on Tezos.
What is?
Yep. Well, Etherlink is I see it as an extension of Tezos in so many ways. And some people see it actually as an EVM extension to Tezos, which is great. That's the idea. So the Etherlink, for those that don't know, it's an EVM layer 2, and it's like, okay, what? So there are a million of those. You go to any crypto conference, you see like every booth is another EVM layer 2. So it's compatible with EVM, that Ethereum network. So any app that you've built for that, which the majority of people have built their apps for it, it'll run on Etherlink. But what makes it so unique and special is that unlike all of those L2s that just they think their instinct, of course, it has to resolve to Ethereum mainnet as the layer 1. We'll batch all the transactions, everything, and put them in the layer 1, which incurs a lot of MEV fees, which is a big burden, and limitations of that blockchain in itself. And there are also questions about the decentralization of it and all of that too, and as well as the governance and its future. It resolves to Tezos as the layer 1. So Tezos, Etherlink does. So for one thing, you circumvent all the MEV fees because you're not writing to Ethereum mainnet. That's where it comes from, the MEV fees. And you get the benefit of the decentralization of Tezos network, which has on-chain governance. It's truly decentralized governance. So where the bakers actually have a hand in shaping the future of the blockchain. Mm-hmm.
On Etherlink, are they using Tezos on Etherlink, or are they using ETH on this L2?
Yes. So there's no special like currency of its own for Etherlink. Most of these L2s, they do that. Of course, the idea of using ETH would be like as a currency, like or as a tool for DeFi. That's one thing. But the idea of
still uses ETH as gas for the transaction.
Yeah, you don't use it. Yeah, you don't use it for that. You only use Tez for that. So Tez is the currency of Etherlink. Yeah. So use XTZ as the currency of it. So the value of it is like it comes down to the Tezos layer. So it puts the value back towards the Tez as the coin.
Okay. So
and this is not even the only.
So on Etherlink, we're still using Tezos, but the thing is we can bring over and port over those EVM smart contracts built in Solidity.
Yeah, that's basically it. So, which is great for anyone who's been building an app. I see tons of people, they've built apps for EVM, and they just feel so stuck in, like, they can't even test it the way they want to because they feel like, well, it's just so much gas fees just to test it. And it's like, hey, you don't have to do that. It's like, you mean like on testnet? No, you can do a production level run of it. You can have all your users use it, so you don't have to like they don't lose money. Just do it on Etherlink. So you get the best of both worlds. You get the compatibility and the source liquidity and contracts and all of that with all the tooling and everything of EVM Ethereum, with the decentralization and the cost management of Tezos L1. Yeah, so that's the thing. And Alon was talking about before, it's just like people in the end, like they just want something that works. It's not about like the sort of tribal associations and like, like it's not about elevating the price of ETH. It's about it's about making a thing that works, that's affordable and works better. And by the way, this isn't the only L2 that we have on Tezos. This is all powered by smart rollups that we have on Tezos. So Etherlink is one this massive smart rollup that goes to the Tezos network, but there's also going to be a Mickelson rollup. So even the Tezos L1 stuff, which is working fine on the L1, will be even more enhanced by running on its own rollup for itself. And we can run. So the working name for that is Tezlink. Arthur mentioned that in the podcast. Alon and I interviewed him with, pinned to my profile right now on Twitter. But also there's another one called Justice, JSTZ. That's interesting. JSTZ called Justice. That's how you pronounce it. And that's so that's a rollup for JavaScript applications, and that thinks beyond our world of Tezos L1 dApps and or EVM dApps, which are maybe that sort of SAM, that larger market that we would be accessing with Etherlink. But beyond that, the potential area market, the one that we haven't tapped in blockchain crypto yet, the ones that are just like, look, there's 23 million JavaScript developers out there. JavaScript isn't a standard of its own league that we can't even compare anything to. So imagine if they could take all of their skills, all of their tooling, all of their stuff, and use that to build very easily applications that can run on blockchain, and let that blockchain be Tezos, and have it be done through this smart rollup called Justice. So it's the best of everything. So we're thinking in terms of like, present, future, and then super future with the Tezos roadmap. So that's that. All of that is called Tezos X. That whole thing, and who knows what? Maybe I haven't heard anything yet, but I think if we eventually come up with some kind of standardization for Bitcoin, layer twos, which no one has agreed on anything. There's a lot of, I think the only thing everyone agrees on is that there will be some standard someday for Bitcoin layer two. I think it'll probably be multiple standards because Bitcoin is so big. But I think we'll be able to do that too. Yeah.
With all these various L2s, you're going to see so much fractionalization or fragmenting. I should say fragmenting.
Yeah.
Of liquidity across these chains, and it just doesn't make sense anymore.
Does it though? Well, I mean, I was thinking about that with liquidity liquid staking tokens on Ethereum, right? There's so many of them now. I mean, there are a few big ones and then there's a lot of small ones. But like,
okay, so
interesting.
What if your chain dies down? Now you have 100,000 on this chain, you have 100,000 on this chain, 100,000 on this chain, and it's not really enough liquidity on any one chain to do anything, in scale.
Right. So it has to be enough. It has to be enough. Right. And but also keep. Most of the assets are going to not be the primitives and like the actual hard value. They're going to be derivatives, just like we have in our normal economy, which outweighs primitives. I mean, our traditional finance, not normal economy. Primitives by 100 to 1. I mean, that's putting it lightly. It's more like 1,000 to 1. We don't have really any assets in the real world, but the derivatives multiply over them exponentially.
Well, that's because it's all paper. It's all paper. In the digital system, it's all over collateralized.
That's true. That's true. Until we find a way, and there there's always some level of risk. Like I think even with the over collateralization, it's like, the collateralizer or the lender has to believe that, like, I can eventually get my money back.
But the thing is that only works to have under collateralized loans. Really, only works if you have a government that says we authorize this. This is sovereign money that we will defend and back up. Because if nobody's going to defend it and back it up,
the full faith and credit of the United States government. Yeah, that's the term that we think of, like for T-bills. T-bills is the most I think it's the most relied on standard in the world. Even other jurisdictional types of debt instruments that they have, like government debt instruments, they probably, like, those governments invest in T-bills because it's like, well, what is a T-bill? It's a very slow growth, very modern thing when it comes to maturity, and they can go as long as like 30 years. But why do people get it if it's so measly the return? Because well, whether we pay it or not, no, they know that the government is going to make good on it, even if they have to print the money, or they have to borrow the money, or they have to do whatever. So it's like, you can't necessarily rely on other governments to do it. Some governments more than others, but it's like, look, if we can't trust that the United States government is going to be around in 30 years to pay this T-bill back, and it's going to pay me the T-bill back, like it's always has been paying T-bills, then what the hell can we rely on? So people trust that, and it's the basis of everything else. Yeah.
But then people in crypto get wise and be like, we don't like anything that gets printed in mass, because you know that you just continue to dilute the value away over time.
Right. So here's the thing. So what do we have that's the equivalent of that in the blockchain world? We don't have, we aren't going to issue random things. We do have the confidence. We have the confidence that there will be one block after the next, right? That the blockchain will keep going. It's like, we can't be sure of that. Sure, people could stop making stuff on the blockchain, but we know it's going to keep going. So to me, like, when I think of, like, say, any like issuance based kind of shit, like take Tezos, it's like, I don't know what tomorrow's going to bring. I don't know the price. I don't know whatever, but I know that there will be more Tez produced. And there will be more blocks produced. These bakers will keep going. Sure, they could all decide to stop, but there's enough of them that I feel confident of that. And with that production coming in, I know, and let's say I'm some issuer of some kind of a debt instrument, it's like, I will have more tomorrow of the thing. Yeah, well, in a way, or maybe in an aggregate, or maybe some kind of a system that connects them, and they don't necessarily have to do anything directly, but like, more Tez will be produced. So that could be the maturity that will be the return on principal, to which, if someone buys something from you now, or like pays you money now, that tomorrow you can give them that Tez that was produced from your baker or from somebody else's or whatever. Like, you will get more Tez. So I mean, if it comes down to that, then it's like, well, we can't trust the full faith and credit of the United States government, but we can trust the blockchain, that there will be more blocks, and that blockchain will keep going, and there will be issuance for those blocks, and someone can get paid that issuance, like as a forward a contract or futures. Like, so we can do all kinds of stuff on that level. So that, to me, is the basis of what future derivatives will be, and it's that level of expectation being fulfilled to which people can trust, well, we can make it paper. We can, like, have another derivative, because yes, this thing could go, like, there could be a cascade of the system, but what are the odds of the whole blockchain is going to? What else do? They, that's when we get the diversification, and then underwriters backing other underwriters.
It'll be interesting to see if that's doing something like that.
Yeah. So it's to me, that we'll get there. Like, I think the concepts are all just, like, they're already there. The concepts exist in traditional finance. It's not you just go on Investopedia, you can see all.
I like the safety net of over collateralization in protocols.
Yeah, but it also limits us as a. I mean, I'm the guy who. Well, I made a lending platform. I agree, where we have over collateralization and we don't let people do it without it. But
if everybody had to use over collateralized loans, then all of our housing prices and everything else would be cheaper, because you wouldn't have credit to extend it and overinflate assets.
Mm-hmm.
The problem is,
and a lot of people, but lift out of poverty as well.
Inflate assets tremendously, and if all credit was wiped out, everything would be significantly cheaper. Your money would actually hold value.
That's why the end of Fight Club never made any sense. It's like, what? You're not wiping out people's credit by blowing the building. What are you talking about? That doesn't. Do you not know how the internet works? Do you not understand computers? What the hell? Who made this one?
Yeah, it's all.
I'm sorry. That was I said it then, and I'll say it now. It's a massively overrated movie. I went through the first 2/3 of that thinking this is going to be the greatest movie of all time, and then the third act came, and it's like, oh wait, this is cliche and shit. They didn't know how to end this thing. And then people are like, no, it was great. It's like, no, you decided it was great in the first half of the movie, and then you just forgave the rest. You got to be good beginning to end. I'm sorry that those are the rules. So, but anyway, enough about terrible ending that predicted 9/11. Like, if we get, so the thing is, in our traditional there are people who do the over collateralized loan thing, but those are people with bad credit. Those are the people who are not even necessarily bad credit, but just there are prejudices that are against them by the people, the human beings who are making these decisions. And there are people who are on the other end of the spectrum who are getting massively under collateralized loans because of a reverse type of prejudice. There's a lot of trust from people who are making decisions in the system and based on soft factors that are not collateral based. And so you have one end of people who are, but where's that money coming from? The people who are over collateralizing, and having put in. So you have people who are being underprivileged, and then they are basically paying for effectively the people who are overprivileged. And that's the disparity of our system. So we don't have equitability, and we have an increasing wealth gap. That is the worst part of our credit system today. That is the worst part. And there's nothing we can really do about it because that's the way it's always been, unless you go to DeFi, in which everything is just math based. And it's like, I don't care who you are. I don't care what you say your credit rate is. I don't care who your father is or the holdings that they have or that nice job you say you have. Because, I don't know, you could be a crackhead, Mr. Fortune 100 CEO. You have the collateral for this. And that's how you get a loan. I'm sorry, but those are the rules and everyone has to play by it. So,
right now, is those who take out debt as we continue to print money. So, I don't know. I think it's fascinating to look at a world that if you have capital and that you can over collateralize and you can get really cheap financing through borrowing against your own assets in a place like DeFi, decentralized finance. I think that's kind of a cool concept. Right now, there's not much advantage to it because it's so easy for people who have money to get access to capital through credit. But I don't know.
And I think one thing I've noticed over the years, the people who are, because we were talking about real world assets and real estate and all that, the people who are very invested in the tokenization of real estate or something downstream of that, like the way it'll be traded or the way it'll be distributed or stuff you can build off of it and all of that. And they have been for many years. And I feel for them because it's like, I know what it's like to wait for something for so many years, waiting for like the industry to kind of mature to the place that it's going, but it's just not there yet. Like the forces haven't aligned. It is, and good on them. It's like they're people who they have access to that real estate and they have wealth from that. And they know that the next step, it would be make it a gold rush could be in bringing it to the blockchain. But it starts with having that real estate asset. So it's people who come from money, and it's like, are they building it up?
There's a lot of discussion of tokenizing real estate, so that way they can tap that liquidity. The question is how's that done? Are you selling liquidity, or are you selling equity in your asset by tokenizing it? And if so, are you sharing revenues from that? And it's I'm kind of skeptical.
Or how it would be distributed and.
You still have a connection.
I mean, I'd like to.
It's like how's that much different than a REIT at that point, right? So
I mean, it's also not really like land. I think it's pretty fungible relatively, but it's still like a very hard thing to kind of pinpoint. Like how is the value of this changing constantly based on, because it's political factors, it's weather, it's other construction. Like to be able to, you have to tokenize or you have to digitize all these events that would factor into precisely the valuation of that land, so that people can find, and so then you can fractionalize land and then be able to trade with it the way you would like with other kinds of high frequency trading in a way that, and then you could do something you couldn't do before in traditional finance to be able to with that digitization. So
I think it's more likely
there's a lot that has to come to be. Yeah,
I think it's more likely we'll see registration on the blockchain just sort of property. In general, I mean, just
collateralize your.
Well, no,
but also somebody has to be if you have to liquidate. If you liquidate the land, if you liquidate your house now, the bank has to take it.
About registration, so that way governments can track what fees and stuff are paid over time.
Yeah,
I mean,
that's
where the hurdles
transparency.
The thing is, we need the transparency. The hurdle of a lot of this stuff is going to be getting government adoption, right? And so it's almost you almost need to get government adoption in order to make some of this stuff function.
So the deal that was once in place for Tezos to build the California DMV titles, to get titles digitized and all of that, and then now they went to the person who did that went AWOL, and then now he's an Avalanche because he wanted more money or whatever. So it was all messed up. But at the same time, a lot of people before that even happened, like people in the test were just kind of soured on it because they were just like, oh, they're actually not even going to be doing this on Tezos. And they're not going to do that on Avalanche either. They wanted to take the code base and just do a private instance, which really defeats the purpose of doing a blockchain-based anything at all. It's like, why do you even need a blockchain if you're not doing it on the public? So it was already kind of stupid. But like, and it's probably better actually, I think, for Tezos maybe that like somebody else like paves those initial ways that don't really bring that much ROI for the ecosystem. And yeah, let them do it, and then we can come in later. But it's like, yeah, so that's how apprehensive. Like they weren't realizing that. Look, this is the value to put it on the public ledger. This is the transparency, and then the assurance of this network of tens of thousands of nodes all over the world, and hundreds of bakers that are governing it, and people watching and monitoring and making sure everything's safe. You have it in a private instance, then anyone can do whatever they want, and you won't even know about it. We won't know about it. But how do you know you're gonna be watching it? Nobody. No, it doesn't work that way. This is the point of a blockchain. What are you talking about? So like that's what happens when you get to people who like they're charged with these decisions and they're making changes to what they would be, or they're curating what they actually want that aren't really understanding the technology. And that's what happened in this case, because otherwise it would have been an easy sell to be like, look, this is the safest way of doing it. It's the centralized stuff that gets in trouble in the blockchain world. They take a centralized thing and they put it on. Yeah, like all those scandals are centralized things. That's what happens. Except for, I mean, you could say Luna. Well, that was on the blockchain. It's like, yeah, but it was also handled in a very centralized. It was pushed up in a very centralized way, and before it was even consolidated for its code base to be able to measure for these economic changes. And because it was done that way, you did have a few whales that controlled a massive amount of capital that could put a lot of weight on one part of the system that would collapse another part and then exploit it, which is what happened as well.
What's interesting is if you look at enough whales, because that's the wonderful thing I like about DeFi and things like DBank, you can look at wallets, and it's amazing how many wallets are sitting in mostly in fiat, right? They're sitting and holding USDC, holding Tether, holding DAI, and they're staking in these protocols. And when they want Bitcoin exposure, they're borrowing against their stable coins to buy the Bitcoin exposure and then trading that, and then basically to earn more USD. So it's kind of fascinating to watch.
Yeah, well, and you can loop it, and looping it in which is another update we're going to do for well, it'll be Tezfin, but Tezos.finance, but it'll be on TezX, where you'll be able to it'll do all that stuff for you. So it's like you put down maybe your Tez, and then it will do the thing where it will go and get the USD and then trade that up for Tez, and then collateralize that and get more USD. But so you as a user, all you see is like, okay, I'm basically effectively buying more Tez than I have, trading for more Tez than I have, and I'm having a leverage position. I'll cash out when I get in a larger place, or the other way around. You want to short it.
So are you building that into
the USD in, and then
people will be able to wrap that?
In TezX. That'll be in TezX. So we have stable Tez, which is the coins, like the stable coins that we have, but it's not like we only use those. And then we have Tezos.finance, which is the lending platform, and then we have TezX, which is the exchange. So that's So right now, if you go to tezx.io, you would see a Sirius dashboard, the liquidity baking. A lot of people know it as liquidity baking. So Sirius is, if people who don't know what that is, it's a decentralized exchange protocol contract that's built into Tezos blockchain protocol itself. Well, it's issued on blockchain, but there's a subsidy from the protocol itself that gives not the liquidity provider. Not only do they get the transaction fees they get from providing liquidity to an exchange, which you get on a lot of any other DEX, or you should be expecting to, but you also get a subsidy from the protocol, which I believe is about I think it's like 1 Tez a block at this point, and that's distributed amongst all the liquidity providers. So that comes out to quite a bit of money. So that's additional subsidy is very motivating for. So that's why the exchange contract, and it's just one single exchange contract on this thing called Sirius, is the largest liquidity pool in Tezos. So it's like, what is that? Like $18 million in self-buy, whereas the overall, you can see it on DeFi Llama. It's the largest single liquidity pool in Tezos. So you go to DeFi Llama, you look up Tezos, what's that? $16.65 million. And it's made up of 2 coins, Tez and TZBTC. So basically Bitcoin, wrapped Bitcoin and Tez. And the reason why it is that is because they're so correlated, just like any, like the alt markets are correlated to Bitcoin. So your risk of impermanent loss is mitigated, and you get this additional subsidy to offset things.
TEZX. What was
TEZX? TEZEX.io. Yes.
EX.io.
TEZX.io.
Gotcha.
TEZEX.
And this is your trading platform for Tez.
Yeah. Yeah, so right now it's a dashboard for that, and then we're going to expand other things. We had another iteration of it where we had cross-chain, or not, multi-chain peer-to-peer swaps, totally decentralized atomic swaps between like USDC and on Ethereum and USD Tez on ETH and ETH Tez, between WBTC and TZBTC. So we had all of those, so we want to bring that back as well because that's such a good module for onboarding. But we decided to go from a very serious centric outward approach with this version of it, and so that'll help bring in more liquidity in, so that people who want to invest in this or put their money into Sirius, they can. And it's meant to be sort of like the big island that connects all of the smaller islands, so other types of liquidity that would come in. But that's a stable place to have. So the liquidity token that's created by being a liquidity provider in Sirius, by putting the XTZ and the TZBTC into and getting that substance, the liquidity token that you get for it is called Sirius token, SIRS, and that SIRS is its own value.
Aren't you swapping your two tokens for the Sirius token?
So you can. There's a liquidity part to it where you can add liquidity. And remove liquidity, and then there's also the actual trading part where you can just swap.
If you're getting the Sirius token, how are you keeping the underlying value of your Tez and your TZBTC?
Oh no, so the Sirius token is the liquidity provider's token. So whereas that would be like something or other on Uniswap, like something that just signifies that you have a liquidity position there. Okay. On for Sirius, you get something. It wasn't always the case. They added that later. Yeah. It is there, right? You can do it now.
Type of pool for any type, like, so if I do
no. So right. So the thing about Sirius, it's just one pool. The whole point of it is that it's just one pool. So the whole protocol of Sirius is that it's one pool comprised of TZBTC and Tez, and those two things. You add liquidity. The protocol gives a subsidy to those liquidity providers as well, and then the Sirius token is something you can do. You can leverage that. You can actually go to something called
because it's only for those two assets. It doesn't have any other assets than those two.
Yeah, right. So yeah, so those two assets, TZBTC and Tez, and then the other asset that is created out of it is this thing called SIRS. So SIRS is not a native asset of Tezos in that sense, but it's like in some, I think of it as like the closest thing too, because it's subsidized by the protocol. Yeah. It's a very kind of official. There's an official basis to it with regard to Tezos. It's not like some random company making a thing. So there is that. And then so Cord.fi, KORD.fi, they were the first ones to make a leveraged liquidity baking platform, so you can actually take that SIRS token and then borrow against that. So we're going to be doing that also on Tezos.finance. And it starts with these tokens because these are the largest tokens, but then also, of course, as well as the USD tokens as well. And then the next thing we're going to do is obviously getting into the derivatives. Now that starts with we're getting into perpetuals, power perpetuals, futures that I mentioned, all of that. And when it comes to Etherlink, the advantages of Etherlink have a lot to do with the fact of the liquidity that access there is to that, and of what MetaMask users have in liquidity and how they can participate. So we will be able to capture value from Tezos Layer 1 and these protocols. So capture value from Sirius and tokenize Sirius, put that on Etherlink. Bridge Sirius over. Sure. I think that might have already been done. But we take from Tezfin, and we have the F tokens, which are the interest-bearing tokens you get from providing something to Tezfin, Tezos.finance, and then you can bridge that over to Etherlink. And then what's the value of that? Well, you can make all kinds of derivatives products based on these interest-bearing tokens that were coming and sourced from the Tezos L1, something that was not accessible before, but now it can, and in a very composable way that's compatible with EVM. So that's the future of what we'll do with Etherlink, or that's the first step of what we'll be able to do with Etherlink. And of course, I'd like to do the same with other blockchain ecosystems. But when it comes to DeFi right now, especially, EVM is the biggest part of the pie. And we also know the value of that, because if you look at other non-EVM layer ones, then they have lending systems, you can see how much they've grown over the last year, especially. So we've seen that with Aptos. We've seen that with Sui. We've seen that with Near protocol. We've seen that plenty of others. There are plenty of others. Lending protocols on L1s are a good thing, and they've been prospering. So being able to capture that value through the interest-bearing tokens that are generated from it and put that on an EVM chain, I believe it'll be an explosion in a bottle to have that. So yeah, but the first thing we need to do is scale up Tezfin, of course. We've been going the organic route to see how long that would take to build up. So, you know, we don't manipulate the markets like other platforms, you know, very respectable, very demure.
Here, I figured I'd share some of this stuff real quick as we're in here. Let's see. We'll just share the screen. Did I do that right? Let's see. We'll just throw this up here.
Yes.
This is the Tezfin that we were talking about. Now,
that's the main page. You can click, just click Launch App.
Click Launch App. I don't have a wallet connected or anything, so people won't see that. But
it's all right.
This is some of what you were just talking about.
So one of the user experience changes we're going to be having shortly will be, you can see there's this one big block at the bottom that says markets. Well, let's start here. You don't know how to put money in. It doesn't tell you or have any switch for it. So we're going to be splitting that markets part up into two columns.
Well, hopefully that means they just click.
Well, yeah, you could just click on it, but it doesn't, like, there's no call to action. There's no call to action. Yeah, so then you have to add like this, and then you can add like that and all of that. But there's no call to action where it says supply and then bar. So cognitively, you have to be familiar with it before you can get familiar with it.
Yeah.
I think that was one of the initially we did have a 2-column structure, but then
that could be a challenge sometimes for you.
Yeah, there was a suggestion to put it into one, saying, "Hey, it's just easier this way," and it's like, all right, let's try it. Why not? And I realized, you know, over this last year, like, okay, yeah, that's, people just look at, they don't know what to do. They don't know what to do.
When you highlight over it, letters should pop up that should say click.
But then it expects you to hover over it. You know, like, we make these decisions very quickly. So yeah, so there's going to be a new. So they're working.
I thought it was intuitive, but I'm used to playing with this stuff. So
yeah, you're used to it. It's the thing. I mean, even for you though, I mean, I think when anyone who's like, even if it's a platform, you know, if it's a new environment and something you haven't used, I see this all the time. Very sophisticated people, they do feel like they need their hands held to walk through it, because it's your money you're going to be moving around. You want that assurance of having that confirmation as to what steps you're taking and how.
And just like at my lock, like, look. I also would like to see, like, what is the utilization of the capital that's in
yeah, which you can kind of see now, but also not really there. And in fact, the numbers shouldn't be like, it should be more like another metric we'll have will be borrowable amounts, which isn't there. Yeah. You can kind of do the maths, but not really even. Like, you can't just, it's not as simple as subtracting something, because you have to think, well, here's my borrow limit, and then all of that, and here's how much is collateralized. Like, so you have to take, so the market size is like the size of the pool, but that's not how much can be borrowed. The collateralized amount is the amount that can be borrowed. And then from there, like, the amount that you can borrow is some function of your collateralized amount in whatever amount that is, in whatever currencies you put it in. So these are indicators that I think spell it out. And that's also the benefit of doing it in an organic way, which is you get to see unmasked, like, all these little things about your user journeys, and whereas it would otherwise be totally hidden. If you just think, well, everyone seems to love it because look at all the money that's flowing in there. It's like, well, no, you kind of just either paid people to use it, or you threw in enough capital in there that institutions are just doing it. And
that's what a lot of these protocols did during the DeFi summers of 22, right? Like now, you have 51% on this, which obviously is a greater APY than the 12.93 that you're going to get. So, like previously, like right now, a wraparound wouldn't make a whole lot of sense to borrow and redeposit it because of the spread. But like
unless you're short term, unless you're short term about this, it really depends on your own strategy. Yeah.
But previously in some of these DeFi protocols, what they would do is they were incentivizing the yield with a token back in the day, right? And so even though you might lose on the borrowing, you were making it up because you were earning something back in DeFi summer, which is why a lot of these
if you sold at the right time, which some people did and some people did not.
Well, that was a problem. Yeah. This is why
most people don't sell at the right time. Yeah, human psychology. Most people will not sell at the right time.
These DeFi protocols, the reason why their token value fell so much is because the people harvesting this, the only way they can make money is if they harvested the token and dumped it right away. And so we sell these token prices that were all at $500 or $200 really high back in DeFi summer, followed to next to nothing, as they inflated themselves away, which was I gotta admit, that was the greatest part about DeFi, was learning about the really what happens with inflation at a high level and how fast valuations
it was,
you ever overinflate.
To me, it's really odd. But the thing is, I think people are somehow inherently aware that like those types of models are not sustainable. But there is that kind of very loose, negligent, optimistic operating ability for people to go forward with it and saying, well, we have this thing that's coming out, and then that'll keep people having their tokens locked in, or there's some other opportunity, or that they'll figure it out in some other way, or something else will boom in the market and that'll save them, or that'll save the coin. It's like, no, you have to think through the end game. And the thing is, there are ways of making things sustainable. They're not necessarily the most obvious. They take a lot of think through to play with different scenarios, but there is a way to make stuff sustainable. It's just not the way that things tend to boom quickly. There has to be this consolidation effect after massive growth, and otherwise, because things cannot keep going forever. And as soon as something peaks, either you run out of people who are willing to participate or able to participate, or you have those people, but those people have run out of money to put into your thing, and they cannot buy any more token. So either it's one of those two things. And when both those things hit, the only thing that could happen is someone can start to sell. And that can happen for just a very natural reason. Someone needs to just pay their bills. Someone wants to get something else. It's not any knock on your coin. You did nothing wrong. Yeah. But then that starts a cascade because other people are like, oh shit, are people selling? I don't want to be the last one to sell. And then they sell. And that's like, oh shit, it looks like a lot of people are doing, I don't know. And then, and then like it happens so quickly. That's why you see in the charts things that just like skyrocket so quickly. Like you see that parabolic move. There's always that opposite effect. You never see a situation where there is no consolidation phase afterwards. It always happens.
We've been seeing consolidation in Bitcoin. The whales continue to accumulate more when it drops. I mean, I buy more every time it drops. I try to buy a little more. There's bags that I will hold forever.
Yeah, so the consolidation effect always comes, but it takes a big collapse to get it there.
I lost a lot of value in Tezos, and I still hold the same bag of Tezos that I bought when it was up. So I mean, like,
if you bought in the crowd sale at what would have been like 45 cents, and that would have been 20. So that would have been 2017. And now we're in 2024. And had you been staking it since it came out, you would have been at like 1.5 times the depth of which you have. So like the value is up, like I'd say 50% from where it was then. But the depth of coin that you should be up and like give you another 50% growth on that. So for the dead of crypto winter, holding on very well, which also means that the jumps are going to be pretty sweet and pretty quick as well. But yeah, it's not.
Well, so and back
Yeah.
to the series. This is what we were talking about earlier. This is the adding the liquidity that we were talking. You get the serious token
Mhm.
that represents these two.
Yes, yes. So this is how you create the Sirius token, and then you get the subsidy. It was back when block times were 30 seconds. It was 2.5 TES per block. When the block times went down to 15 seconds, it became 1.25 TES per block. So I guess now we're at 10 seconds. So you can, I haven't confirmed, but I assume the protocol had brought it down to 8/10
Now,
to make it commensurate with the block time change. But you can do the math of how many blocks how much TES that is per day, and how much
yeah,
it is per year, and then what your proportion of liquidity being added would take of that TES. Pretty
I
sweet
know you're
compared to how.
you're tied with TezFin. Are you also tied with the TezX?
Yeah, so TezX and Tezos.finance, they're both part of StableTech. So Stable.tech is the company that does all of this,
Stable.
and it's a consortium of multiple entities in the Tezos ecosystem, respected companies in the Tezos ecosystem, and yeah, it's governed by, as I mentioned before, the non-shareholder foundation called the Tez Stablecoin Foundation, based out of Panama, and yeah, so it coordinates the right, so that it coordinates the production of these things and the maintenance of these things with
Okay.
different entities
So
in the
we've
Tezos ecosystem.
touched
Yeah.
on TezFin and we've touched on TezX. Why don't you tell us about the stable Tez?
Yes. So stable Tez, and that was the first thing we ever did, starting with USD Tez, which was the first stablecoin on Tezos, about 4.5 years now since we launched it. And still today, it has the most holders, like twice the amount of holders that Tether has, since Tether came on the scene, Tezos, about 2 years ago now, 3 years ago. Yeah, I want to say, yeah, that's about right. Yeah, so about 3 years ago, and it came on the scene, and yeah, still have twice as many holders. It's more active, and that's because it's very participatory. It's only on Tezos. ETH Tez is also very popular on Tezos. It's wrapped Ethereum, it's wrapped Ether, and then we have BTC Tez. And so what we're going to be able to do and what we are able to do is we have so much more ability to innovate and build off of all of the updates to Tezos technology on the protocol. So for one thing, we want to create the basis, the store value basis to which these USD Tez tokens are built on, to be on tickets, whereas right now it's a straight contract. And that tickets are great because tickets is of course a word that we use in a million different things, but in this context, what I mean by tickets is something that's special that was added to the Tezos protocol a few years ago, which is its own asset standard. That's even the FA's token standard is the community standard. There is a different type of standard that's baked into the protocol that's tickets. And one of the differences of tickets is that like Tez itself, it's not a token that just is on a smart contract and that smart contract just says your wallet address on it. No, the tickets actually go to your account. They as close as we could say to physically going, they're going to your wallet. So you actually have custodial control over it. It's not a smart contract that just says, here's how much of it you own. And your wallet kind of just reflects that by showing, here's a token and here's how much of it that smart contract says you have. No, the token, the ticket in this case, is actually in your wallet. So it makes it more real. Also, the tickets are far more composable. The composability of tickets and stuff you can do with the protocol is just so much more. And in particular, when it comes to L2 standards, being able to read them as opposed to FA token contract. So Etherlink is aware of tickets that are on the L1.
So is there a dollar backing each one of these USDT?
So you could go to so you could go to the reserve tab at the in the menu bar, and then you can see we have years of audit reports.
Let's look at that real
and,
quick. Well, so
Tezos Foundation.
So you can create it using USDC. You can get it through an exchange. You can use a credit card. It looks like, and the role is this for banks or something?
Yeah, so I should probably actually reorganize. So that's actually for the mentorees aspect. The mentorees, if you want to become a mentoree yourself, so if you're an institution that wants to do it, you can enroll in that way. And so mentorees, the idea is we want mentorees to be, or essentially initially we want them to be all bakers. We want Tezos bakers to be the ones who we trust. You can see their record on chain. They should be the ones who would mint and redeem these tokens. And there are still, we have the bakers are the more active ones in that regard. We've had institutions do it. So like Wirt.io, which is the credit card company, you can do it by credit card. They are enrolled as a minter, so then they can mint and redeem as well. Different brokerage houses can be able to enroll in that same way. We want you to be an entity. That's better, and something that would suggest trust. That's it. And of course, there's a background check and KYC and all of that stuff. But so like a mentoree, I know Bacon.ca, BAKIN.ca. They're a minter, or they're a baker on Tezos, called Canadian Bacon. So Canadian Bacon is a minter on Tezos, but also they're an enrolled mentoree. And so people go through them for minting services in that regard. So same with Cryptstar, same thing.
But is it all still, every token is still backed by $1 somewhere?
Right? Yeah. So if you go to the next tab, you just opened up.
Okay.
Yep. So we have different collateral sources, but we have USDC, USDP, and GUSD. The reason why we chose these, and there used to be other ones, but we've skinnied it down to this because these are the ones that are they're US domiciled reserves. To which, like what we saw with USDC a year ago was when a Silicon Valley bank went belly up, and then people were like, oh crap, like a third of their USDC reserve is in Silicon Valley Bank. What's going to happen? Oh my God. The price actually did dip for like a second. And then people realized, wait a minute, this isn't Tether. This is a US domiciled reserve. And then like within a day, Biden was like, yeah, we're going to bail out Silicon Valley Bank. And that's essentially what you're getting by going. That's what you're buying by getting these types of stablecoins that are domiciled in the US. So for us, it was like, this is why we want the compliant ones. We can use those assets. And then, so at the time that we did this, it was considered unusual. Now it's becoming more commonplace that we see they're getting other digital assets to be part of their own reserves. And then if you scroll down, you can see years of attestation reports. First, we had it from Armanino, and then from the network firm. Probably do an update on this pretty soon. And those were sponsored by or financed by Tezos Foundation. So key attestations as well as their reserves. Essentially, you can just see it. The truest evidence of this is not even these reports. It's just looking on the blockchain itself and being able to see that, are the assets there? Yeah, they're there. Okay, well, we're done. That's the most transparent reserve you can have, is a blockchain you can look at. So you can look at the wallet for the reserve and see that it's there. That's how we structured it. So, and that's how we'll continue to innovate. But really, the point of USD Tez, like the point of other stable Tez assets, is like USD Tez to have a stable coin that's reserve backed, that's scalable, scalable liquidity, that's fully Tezos, that issues to Tezos chain and only as Tezos chain. And niche specific and blockchain specific stablecoins are growing in popularity. Like people are realizing that, other blockchains themselves centrally, they're trying to do it. Put the money in, and then, and we would probably get a lot more cyclically happening with the growth of the liquidity, if there's a higher base liquidity to begin with. So if there were $100,000 in USD Tez in there now, or even Tether, $100,000 in Tether now,
rates would drop and stuff like that would change.
Rates would drop, and then it would become very attractive to borrow, and people would borrow so they can leverage trade or buy stuff or whatever it is they're doing. And then, of course, the idea, and this is where it really comes in, the resupplying of so the rates will go back up. And then we'd have a very attractive supply APYs again, but the pools will be large enough that like a more average type of person would say, I can put in as much as I want to put in and supply liquidity as much as I want to supply liquidity without me having to worry that by the very act of me doing that, I'm going to be bringing down these rates and having to rely on somebody borrowing afterwards. That's the key of what people want to see. They want to put in incrementally, even though that incremental addition leads to an overall growth. And they don't want to be the one to, like, they don't want to have to put in, like, if you put in more than a few dollars, they don't want to see the rate change on that basis. Yeah. So it has to be worth enough that it has to be worth the clicks, the opportunity cost of the clicks that they would put in, even if it's just to experiment. But a lot of people have experimented. And I particularly
more utility. Yeah. I think like DeFi took crypto on Ethereum took off really well because of the whole fad with NFTs that took off, and so people were doing stuff which created activity in the space. And I think people need to find other reasons to have activity in the DeFi space or crypto space in general.
Yeah.
Other than meme coins, Solana's hot, but Solana's hot. All these meme coins and people gambling.
They go together. They do like go hand in hand. So so the other thing, I don't know if I showed you this. The object, I've submitted this to we want to put this in somehow. If you have the access, the object roadmap. And for people who use Object, you can actually go to their website, and at the bottom there's this thing called Roadmap where you can actually suggest changes, suggest updates to the Object website, like features you want to see and all that stuff. So this is something I submitted, and people upvoted it, and now it's under review. So what the idea here is, if you go to Object now and want to buy an NFT, and Object, for people who don't know, it's the largest NFT marketplace on Tezos. It's one of the largest NFT marketplaces outright. If you want to buy something, like you click on an NFT, click on any NFT, it'll say go to a wallet, like, or do you want to we'll just click on something. Click on any one of those. Just click on anything. Yeah, and then click on you're not actually going to buy, but just click on the cart, the little button to purchase. Yeah, so you get these options right now: wallet or credit card. You go to wallet, it queues it up so you can buy it in Tez. Credit card, then you can use the credit card, and then you can do it. But the thing is, so now if you want to, you can accept as an artist USD Tez, for example, but you have to make your listing. When you make your listing, you have to make it for USD Tez. So that's a huge friction point because you're also excluding yourself from all the Tez that people could be paying you for. So what the idea here is that I have in that other tab is that, well, why not let the artist just get paid in whatever they want? Let the payer pay in whatever they want, convert that on the back end so the artist sees what they want and the collector pays in what they want and everybody's happy. It helps Tez. Yeah, it doesn't take away from Tez either because there's a conversion going on. So yeah, it could go to 3Route, which is the big aggregator exchange, and it can make the swap there. And you can show things in different prices, allow people to see something in USD if they want to see that. It's like that language thing we were talking about, where like you just see the language of your choice. You're not seeing what the person is actually speaking in. So that's the next step. That'll get us the full cycle with commerce.
Well, so right here they have it. So you can make an offer.
Yeah, you can make an offer for it. That's another way of doing it, and I've done that before.
Which be the same thing. So you're basically saying take this type of option right here, where they can make an offer, but instead putting that
just make it the payment,
so you can select the way you want to pay.
Yeah, and it just trades on the back end for the other thing.
Well, and then the user would essentially say what forms of payment they're willing to take.
Yeah, right now you have to be willing to you choose a currency. I don't even think you can select multiple currencies right now on Object. Yeah, well, if you're the artist, you can only choose. Yeah, you can offer. No, but like so what I'm saying though is the default to which if you could just pay, and you can do that in USD Tez. Yeah. But the artist, when they make their listing, they have to choose USD Tez as the currency they want to accept. And by nature of doing that, they preclude their ability to accept Tez, which is a big problem. You can't do that. You just like you're cutting out most of the market there. Most of the market is trading in Tez, at least right now. Uh, so and moreover, it's actually it's better to do it. Yeah, even better than just letting people pay in whatever is the fact that it would be able to convert, because that also helps Tez as an asset. Like it helped because it puts demand pull on Tez and so yeah, it's good if artists get paid in Tez if that's what they want. Or if they want to get paid in USD Tez, let people pay in Tez as well, because that also puts demand pull on it. And then that can convert back on the back end. People get their fees, and then you get the coin that you want, and then you can collateralize that and then borrow against it. So the synergy between Tezfin and Object, I see as being the biggest synergy of them all. Like once we get things in place, and I think this is the last thing we need, is to have this level of conversion. That'll be the biggest, because we have this massive battery of talent and users and commerce on Tezos. Not every ecosystem has that. Ecosystems with market caps way higher than Tezos, they don't have this natural battery of users that are just coming in every day to use the products. Tezos does. What it doesn't have is the financial set in order to scale its economy. So we are quite literally,
and that just
in
comes
many
from
ways, in a medieval economy. Yeah, we're in a pre-modern banking economy on Tezos, where it's just the amount of Tez that's there, and that's what it is. And all we can really do is just try to save it as best as we can and spend it. And then, an artist gets paid in Tez, and then what do? Let's say they will take it to Coinbase or something and liquidate it, putting downward pressure on the price, and then that's not good for Tez. So what we want is to keep the Tez in the ecosystem. So this provides a means for an artist to get paid in however they want to get paid, and then they can just put it in what's something that's interest earning, like an interest bearing thing, and that's on Tezos.finance. And then if they need some other asset for something else, they can get that too. So it completes that system. And this is the number one thing people have been asking about, like wanting for Tezos for years. Even if not directly saying it, they'll be like, why is there no liquidity like we have in other blockchain ecosystems? And we'd say, well, it's because DeFi isn't scaled. Like, why isn't DeFi scaled on Tezos? It's like, well, we don't have credit markets. We don't have lending systems. Like, why is there no lending markets? And in 2021, it was like, well, actually the blockchain itself can't facilitate those types of dApps yet. We're working on it. We'll get there. So if only we had Tezfin in 2021, you'd be seeing a very different situation for Tezos overall, and the amount of liquidity and the amount of art that artists are getting. So it is very much an ecosystem imperative. And by the way, just so people know, I'm not saying this because it's your platform. Of course you're saying that. You could go to upana.finance. That's another one. You could say, fuck Kevin, I'm not going to support anything. Okay, fine. Go to Upana and support just lending in general. Really mean it. Upana.finance, YUPANA. ANA. Yeah, .finance.
So we're fair.
Yeah, so they were the first open source one, but we were the first to go to mainnet. So yeah. We're at similar liquidity levels, and I think most of that is actually not in. I think the most of the money they have there is. But yeah, go to app. Let's see the markets.
That's not a whole lot. That's not a whole lot. So what do you think?
The biggest market they have is.
What do you think is the biggest struggle for Tezos to attract capital and liquidity over there?
Yeah, TZBTC is their biggest market right now. It's a small market on Tezos Finance. So people collateralize their TZBTC and then they borrow other stuff. So the biggest market for what the struggle with Tezos. So there's a few different sides to it. Really, commerce in terms of product, it's good. Object is killing it. They don't have liquidity. So who does that come on? It comes to DeFi to scale. Scaling DeFi, we've once proved that we could get $200 million in overnight, from 8,000 or more different users coming in and participating back at the heights of Crunchy and Plenty and those things, back in that 2021 era. What we didn't have was retention of that liquidity. And that's because the thing you need for retention, lending platforms where people can supply funds and earn interest, the blockchain itself couldn't facilitate those types of. So it's not like we were stupid. We didn't think like, oh, didn't you think to make the lending platform first like others do? It's that the blockchain itself couldn't facilitate it. We were trying to work around it. StableTech was. We were trying to make Tezos.finance before there was upgrades, but it took an upgrade, the Ito upgrade that came at the end of 2021, before it was even possible. And we couldn't launch domainnet before like sort of mid 2022. And then it was 2023. We were just doing the security audits, reviews, and all that. And then here we are in 2024. And now we're operating on scaling and getting it up there and doing those. So it's really also just about hitting at the right market. We launched in the dead of the bear market is the problem, crypto winter. So it's not a good. So yeah, so it's important to get it right now so that when those masses come to us, we're ready. We have the capacity.
Is there a way to look at what percentage of Tezos is actually locked into baking?
Yes. So if you go to tzkt.io.
tzkt.io.
Yeah. And you'll see this section in the middle there called staking.
Yeah.
Right under the search bar. Yeah. So that'll show you total staked. It's 19.55%. So this is the amount that's locked in. It's locked in the ecosystem. Total delegated, and that's so it's liquid delegation, which is what Tezos had.
Is this 46%
since 20 since the beginning? That's delegated.
46%?
So that's liquid. That's not locked.
But is that representative of the 19% that's staked? Like, is this 46%?
No, these are two different things. So staking. So total staked is the total amount of that's locked, okay? Total delegated is the stuff that's not locked, but it is delegated. So it's in wallets that are delegating to a baker. So with delegating, your funds are liquid. You can move them around, you can sell them, you can buy things. Gotcha. If it's staked, it's locked. Yeah.
So only 20% of the supply is locked.
So, and if you look at that bottom line that says estimated APY, you might see, so that 8.4%, that's how much you get by delegating, and that 16.7%, which is twice as much. That's how much you get from staking. So those staking rewards are very attractive now. It's not always going to be like that. It's going to come down. So it's to say, hey, if you want to stake, you should get it now.
As the number goes up, that should come down.
Yeah. So right now in the Tezos, and the other thing is, what this is eventually meant to do is to bring the APY for any of this to be down under 1%, down under 0.5% or whatever. And the idea there is it's to reduce the opportunity cost of not delegating, so that your liquid Tez is just, it's worth a spend. It's worth participating in DeFi. It's worth participating in buying an NFT and all of that. You're not constantly thinking about because right now you're worried about if I buy something with my Tez, I'm going to miss out on the rewards I'm going to get. Even if I'm just liquid delegating, I'm missing out on the rewards. That's 8.4% rewards. I don't want to miss that.
If you're not staking, you're losing value to debasement because you're increasing Tez.
If you're not staking, you're losing half the value. But if you're not delegating, which happens when you move your Tez off of your delegated wallet by purchasing something or supplying to DeFi, then or buying another token on Tezos or something, everyone's afraid to get rid of their Tez because they don't want to miss out on the delegated staking rewards. It's liquid staking rewards. It comes to you every 3 days, and they don't want to miss out on that. The less Tez you have in your wallet, that's the less delegation rewards you're going to get. So people don't want to miss out on that. So
that brings up an important question. If you put your Tez in your protocol, are you still collecting delegation rewards?
Well, no. So what right now for Tez, no, there's no delegation going on with Tez. There's no staking going on with the Tez. The Tez is you're doing it for collateralization purposes and
off the platform, not the baking.
Well, here's something you can do. If it's hey, that's the Tez that can be staked somewhere or delegated. So you can collateralize something else, borrow the Tez, and pocket the difference from the delegation reward and the borrow APY. That's something that some people have figured out, and they can still do that. I mean, as long as the borrow APY is lower than the delegation reward rate, to some interpretation.
So
that's the borrow APY. So that's the amount that you owe. That's the amount of debt. The borrow APY is the amount that you owe.
So right now, they put Tezos in. They're earning 12%. They put USDT Tez in.
Yeah.
They make 12%. They borrow Tez at 5%, and then they bake it.
TZKT. Or they delegate it. Even if they just delegate, even if they just leave it in their wallet and do nothing else,
Yes.
they don't have to lock it in. They can just leave it in their wallet. They're going to be earning that 8.4%. Yeah. So that's arbitrage that's active right now. But because we don't have efficient markets in Tezos yet, people aren't noticing it or acting on it. Or maybe they notice on it, but they're like, well, if it was so efficient.
Financial advice. None of this
real.
this is me thinking things through. None of this.
No, it's good. This is the user journey, and it helps me. This is like how this is proper ethnography for product revision. So there is that. So that's a way of doing it. Or you could put in Bitcoin, do that. There's all kinds of stuff you can do there. Or you can do arbitrage on other markets for these other tokens. But yeah, so the thing is, once the rate of rewards though will ultimately go down to a point that people are not going to feel so apprehensive about using their Tez for stuff. And I don't know, like I haven't heard, maybe even delegation rewards might go away one day. Who knows? I don't know.
The biggest problem right now with it is you have to pay attention to it, because like the rates can change and fluctuate daily. And if you're not paying attention to it, you can end up upside down in your position. Yeah,
that's the risk you take for this kind of thing. You have to pay attention, or play it very safe for one thing, for another thing. So we're at a place now. But it's interesting. So I mentioned before, and here's the last thing you should know about what's going on in Tezos these days. I mentioned before the rate for the returns that are coming as we get to the 50% staking target. Now it's at 19.5. You want to get to 50%. When that happens, the adaptive issuance system gets triggered. The rates will come down dramatically. The minimum rate will be 0.05%, I believe. And so,
is there an unlock period? Is there an unlock period on how long it takes somebody to unstake?
I believe it's immediate that you could do that. No, and like by the next cycle, I believe. And I guess that just takes a few days. Or I'm remembering it wrong. Either it's that or it's 4 cycles. No, I think it might be 4. Yeah, that sounds right. Or I might be. You can Google it. Anyway, so we will get down to a very low return rate for all this. So the whole point of this is to reduce the opportunity cost of not delegating. But the thing is, some people are looking at the rewards right now and they're thinking like, well, we haven't hit the target yet. And I know that this is high, so we can encourage people to get to the target, but this is high. So they're seeing this as inflation that they don't want to see, and they're worried about that. And it's like, but others are like, well, wait a minute, that's fine. I mean, the people who are getting those rewards are the people who are most likely to hold on to it, because these are early participants of staking, Tezonians and all of that. Plus, it's not so marginal. If we adjusted it, it wouldn't be that much lower. And also, we need it to be this high to motivate people to start surprise people. We're talking about raising the rate for on that.
Yeah,
basis. But really, the reason why. Well, let me finish. The reason why the staking isn't at 50% is a marketing reason. That was my argument, that we haven't figured out how to communicate any of this stuff.
Gotcha.
So what happened was there was a governance proposal that came out on Tezos for this last cycle. Quebec was the proposal that came out, and the core development people, the people who had influenced this regard, thought like, okay, well, we're going to reduce the issuance, we're going to bring it down. Bakers had a backlash. By and large, like, no, don't do that, and all the things that I just said. Plus, they rely on those rewards for their customers and for themselves. It's like, if they're not seeing it as inflation, they're seeing it as more rewards. And so so that debate happened. Well, so there's 2 more parts to this. So the debate happened, and then the core developers were like, okay, we're going to release 2 variants that you can vote on in the proposal period of Tezos governance: Quebec A and Quebec B. Quebec A reduces it massively in the way that we really wanted to do it. Quebec B is a lighter version of that. So if you really are against what we want to do here, then go to Quebec B. The bakers were still not having it. So bakers decided to independently, came from an independent baker in the ecosystem, took the stock proposal and said, screw these variants. I'm going to make my own variant, and it's going to get rid of that modification entirely so that we retain the current reward rate for all its good that it brings us. And then that went in, and keep in mind, no community proposal in all these years of Tezos governance has ever won before until now. until last week, for the first time ever, a community-created proposal won in the proposal phase of Tezos governance. And now it's in its second phase of Tezos governance, because there are 5 stages of Tezos governance. And that is the exploration phase. So the exploration phase is now, and what happens here is that even though Kina, which is the modified community-driven proposal, advanced to this stage by getting the most votes, it actually won by 2/3 of the vote, and which is huge. And now the bakers have to ratify this to say, we're going to move this on to the next stage of the process, to the testing phase, before it goes for the final vote in the promotion phase. But to get there, we've met quorum. We definitely met quorum. We didn't need that much to get there. We went over that mark. And now we need to get the supermajority of 80% so that Kina gets over the top. It's now at 74.25%. So it's...
And what will Kina do?
Kina will be the upgrades that are coming with this cycle, but it will retain the reward structure for the issuance the same as what it is right now, without reducing it for people. Okay, so pretty much all bakers are most relying on this, so yeah, or believe in this. So
my biggest thing is that I've come to terms with APY, at least when there's a token issuance, that essentially that's the inflation rate of your token supply. And anything that has a positive inflation rate or positive APY is basically debasing the currency over time and reducing the value. And
so too long of this is obviously a problem.
Correct. Ideally, you want to have inflation less than the dollar, otherwise you're losing to the dollar.
But keep in mind, so people should be reacting. Like, this is not an efficient market. The marketing has been it's getting better, and I really believe in the upward improvements that and of what Trilitech brings, and that they're able to respond to feedback and improve on that, like the way a product actually should be managed. So like stake.tezos.com is a website where you can do your staking, and that's being improved now. There's going to be a new version coming out, so they're working on that, and you might want to check that out too. Maybe put that on screen, stake.tezos.com, because that's wherever. But now you can do it in your wallets too. I think Temple wallet maybe updated that you can do it.
I think was it
Kukai.
Yeah, Kukai. I think you can do the Kukai in that too. But we should probably wrap it up. It has been
it's been going on for a while.
2.5-hour show. I don't know if they expected that. This is the longest show we've had
Delegate
so far.
Stake, yeah. You can do it on different wallets now, but yeah. Good show, old boy.
Good show, exactly. Well, I know you love talking Tezos, so I figured, we should give you a moment to talk some Tezos.
And to strangers, I like to stranger audiences.
And if you are familiar with us, come back and check out our website. I don't know if this pops up, and we will see you guys all next time. Obviously, if they want to learn more about you, they can go check out the
Kamarabi, or go to Kamarabi on Twitter, or go to stable.tech.
Yeah. Anyways, everybody, thank you for joining us today, ending the show, and you have a great day.
Goodbye.
Bye. Let's see. I don't know. Is this fighting? Yeah. All right. See ya.